All right. How's it going, everybody? My name's Antonio, and I am the only ginger grill master on the, well, aspiring grill master, not yet there, but I'll get there on the internet. And I have a lengthy CEO barbecue this week because I have four companies in here that I'm going to be talking to. Two of which potentially difficult conversations, highly requested conversations to uranium companies, that is. But all in all, yeah, we're looking for uranium in the Athabasca Basin. We're then moving to look for nickel in BC, so still staying in Canada. Then we're flying over to Ecuador to look for gold, the fine and a deposit of gold, basically, or hopefully a bigger deposit of gold. And then we're going back into uranium, but then in the US, and we're trying to produce uranium in the US. So that's pretty much it. As always, though, fair disclaimer and honest confession. I still have no idea what I'm doing, as evidenced by my returns, or better said, lack thereof. So please don't follow me in any way. Don't care about my opinion. Don't take anything I or any of the guests say in here personally. We're not talking to you. We're not saying what you should do or not do. And the fact that I'm talking to these CEOs doesn't mean that I'm buying their stock. And it by far also doesn't mean that you should blindly do so either. These conversations cannot and should not be treated as independent research or any research of any type. This is a YouTube video. It's not research. Just look at them as what they really are, which is conversations, right? There's nothing more than general and impersonal conversations between two talking heads on a YouTube video. That's what this is. If you don't enjoy losing money, please head over to setterplus.ca where you find the company's official filings, print them out, use them as wallpaper, do whatever. Just make sure to read them, understand them, then talk to a professional investment advisor to figure out if any of these things would fit in your portfolio. And then, of course, take your own decision in the end, because the mineral exploration, development, and mining industry is among the hardest industries to profitably deploy capital in, as there are many risks out there not necessarily as easily visible to the naked eye, and you will lose money if you don't do enough research. In addition, I want you to know that I own shares of Baselode Energy to my own name, and they are paying for the production of these interviews, so that makes me biased. Although I never send in questions up front and companies don't have editing rights over these videos, that still doesn't mean you should think of this as independent research, because it will include forward-looking statements about uncertain events that may or may not happen in the future. So pause the video and read what's on your screen right now, because again, you will lose your money if you don't know what you're doing. That all said, we are starting off with the first potentially difficult conversation here, which will be with James Sykes. He's the CEO of Baselode Energy. I'm not doing the typical company overview here because you know the basics, right? It's uranium exploration in the Athabasca Basin. Made a discovery, I believe, in 2021. They have three drill-ready projects, one discovery in the right side of the Athabasca Basin, close to surface, yada yada yada. You know all that. But here's the thing: they just raised capital. That capital raise surprised a bunch of people out there, and they now have $12 million in cash after raising this. $5 million, 80% of which, by the way, was flowed through, and it was raised in an almost 50% premium to the market price of baseload. So, well, that again leaves them with $12 million. And this is going to be a $12 million drill program because they basically spend almost all the money that they have on drilling and exploring these projects. And that's a $12 million drill program on a $55 million stock. It's actually four drill programs separate. So they're across three projects of the four projects in total. So three projects are being drilled, and drilling is expected in less than 2 weeks, right? So James, is all good stuff, and I like it. But last time we spoke, I was left with the impression that you didn't have to raise capital anymore, at least this year. So what happened? Why the capital raise right now?
Hey, thanks, Antonio. Few things. There's actually quite a number. One, costs were going up. So after you and I talked, yeah, we just found out that our costs were continuously going up. Contractor costs are going up. Helicopter costs are going up. Drill costs are going up.
Hmm.
We know food and gas costs are up. Everything just kept going up. So we had to re-rate. We had to change our whole budgeting, dollar per meter costs. And so, yeah, that starts going up, and we have to take money away from these surveys or drill program here and there and start reallocating. So we were still happy with what we were going to get done, but we wanted to make sure we could get everything done without having to risk going over budget. And it just, yeah, made a lot of sense that we are able to expand our drill program, which we've done. We've added 3,000 meters to our planned drill programs, which is, again, Baselode's most extensive drill program we've ever embarked on. The exploration this year. We made the Accio discovery in September 2021. All of our focus has been there. We haven't properly set out and done any greenfield exploration in the scale that we are embarking on this year. So it's a big endeavor and it needs money to do so.
Hmm.
So yeah, we want to make sure that we can hit as many targets as possible. Catharsis is looking great. Bear is looking great. Accio is looking great. Hook is looking great. And we got to hit these targets.
Hmm. I saw the financing come in, or the news of the financing come in, and I was ready to get angry at you. And then I remembered that you told me that you didn't have to raise capital. You didn't say you aren't going to, and I suppose there's a difference in there that I should be paying more attention because I was under the impression that you were not going to, but you said I don't have to. So, um, that's a little bit of a difference there that sort of calmed me down. But I'm still trying to understand. Maybe you could walk me through that decision though, like in general. I mean, I get it. You want to drill more, but why besides the cost raise, why increase the drill plans now? And where I'm coming from with this is because I'm thinking, what's the risk reward of doing that drilling or more drilling right now? I mean, the market hasn't cared much about what you have going on right now. Do you think it's going to do something to your stock if you made a new discovery? Do you think the market is going to care about that new discovery? That's what I'm asking here.
I believe so, yes. I humbly believe that
Hmm.
any new discovery will be looked at favorably and will do wonders for any company's share price. Oh, that's the nature of the business. Explore, discover, you can benefit from that. With our additional model moving forward and looking for something that could be mineable and economic in a very short time frame, I think that just bodes well.
Hmm.
And so that's with 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 the exploration plans that we have moving forward now, we can, well, we're hoping to obviously make those discoveries.
Hmm.
You can never tell. And that's the unfortunate thing about exploration. And I think what we do at Baselode, I think we do it very well, that we pick the best targets that can yield these type of discoveries, large scale uranium discoveries. So that allows us to be much more efficient with our drill dollar. And if we're, again, we can fail. And that's always a fear. I've drilled many targets that some are fertile, some are not. It's just the
Hmm.
nature of exploration. But we prioritize what we do believe to be our best targeting strategy. You know,
Right.
I I I have the thought in the back of my head every single day. What if we miss? What if I'll love these targets? I've got a lot of faith in them. But what if there's just nothing there? And that's a possible reality.
Hmm.
So we do our best job to make sure that we do target what we think are the best targets. But what if there's just nothing there?
Hmm.
So drilling one target and walking away for the year, no, that doesn't have a good positive ring for our investors. I don't think that benefits our investors at all. We've been pushing Accio. We've been hitting Accio hard. We've had great results. Accio is an amazing deposit. Accio is absolutely wonderful. Grades are great. The size is looking great. It's got expansion opportunities. It's got far more to it. Accio hasn't caught the investment community's eyes or ears or just the love for it.
Hmm.
But we see the potential there. We think that has many numerous similarities to other pre-existing mines in the Athabasca area. So not even globally, which there's a lot of similarities globally to Accio, but even just in northern Saskatchewan, there's a lot of mined similarities to other deposits that compare with Accio,
Hmm.
but it just hasn't caught the market's eye. So we will continue looking for what people want to see. People want to see these ultra rich, high grade uranium deposits, these 1%ers, 5%ers, 10%ers, Arrow Part 2. And I do believe that they are out there. And I think we've got the right projects that could be hosting some of these deposits. So we're going to do a big kick at the can, huge kick at the can. We're not just going to try to drill one target and be, okay, well, we failed on that. Let's just go back to Accio. we've got a lot of targets lined up for this year, a lot of targets.
Mm.
And with our track record, we should be successful. And I really hope that we are. There's no way to identify if target one's going to be right or target 20 is going to be right. You never know. So we just have to drill and hope that we are right.
Mm. I
And we did. Sorry, go
No,
ahead.
I mean, I get that the geological risk is still there. That's what you're trying to see here. There's financing risk. All these risks with these small micro cap companies that they're always there. And but so what I was getting to is sort of the decision behind wanting to raise right now before the drill program at a price that's stock price what over 50% lower than the all-time high. So what I'm thinking about is raise now versus drill, come out with some results, let the stock run, uh, rising prices, and then raise at higher prices too, basically. And I'm sure there's a risk
Uh,
reward related reason there, but yeah, I mean, why is that?
well, again, you were kind of just talking about that. We can have great results, doesn't mean our price is going to run. We think it should. If we make a new discovery, we think that our price should run. But with results that we've pumped out of Accio, which have been great results, haven't led to our stock price really running. We've been flat. So will a new discovery benefit us? Theoretically, yes, but Accio has kind of bucked the turn.
Hmm.
So raising now makes sense because again, we were at, this is probably one of the highest prices we were able to get in a raise in well over 12 months. So we were able to get it at our price at a premium, to get the share price at a premium. You never know what's going to happen in this market. Look, Japan had fears of earthquakes, and the nuclear industry took note of that right away, right in the beginning of January. If another Fukushima happens, what do you think is going to happen to all the investment appetite out there? It's going to wither in fear.
Hmm.
The uranium, nuclear, it's a very fickle market and can turn at any second. The war in Ukraine and with Russia, that's a sketchy situation every day. All it takes is shelling of a nuclear plant, and that's doom for the industry. So it's a very fickle market. It shouldn't be. Hopefully, nobody's crazy enough to bomb a nuclear plant. We need them. Everybody needs them. So we don't know what's going to happen in the market.
Right.
2023 was supposed to be a great year in the investor space. Back when you look at Q1, that turned pretty south, and you never know what the markets are going to do. So when the opportunity presented itself, yes, we didn't need to, but everything looked right about it. Higher premium. We don't know what's going to happen in the marketplace. We don't know what our results are going to be driven like. We like to believe that our share will be performing much better by the end of the year, but we
Hmm.
honestly don't know.
But you're the way you're telling me right now, because you said the opportunity presented itself, like it sounds almost as if the $5 million fell on your lap. Like, was that the case, or did you have to go look for it?
It basically fell on our lap. We did not have to go looking for it.
So you
So
didn't pick
we
up the
weren't,
phone, someone else
no,
called you, basically.
no, no,
Okay.
that fell right into our laps. We were not actively looking for money. We had a we had a commitment from a well-reputable player in the uranium space that we like to get into baseload, and with the reputation that they have, it's great to have them with as baseload supporters. That opportunity just fell into the lap. They wanted to get in, 5 million bot deal. It sounded like the right thing to do. So we're
Okay.
we're we're happy with new investors, people who have that long-term vision.
Well, that does change things for me. I guess I'm trying to pick my words carefully here because it's so this is flow through shares, right? The majority of what you raise, as I said, 80% is flow through
80%.
shares.
Yeah.
So you literally cannot waste this money. And by law, by Canadian tax law, it has to go into the ground in the form of exploration in any way
Yes.
in a way. And so I obviously appreciate that part of the flow through shares. But what I don't appreciate is that you don't not you but companies typically, but it's none of what you're saying, maybe you do, but companies typically don't control the 4 months plus 1 day fate of the stock. Basically, in this given case, it's a life the life part of the deal makes it that it's just 1 day fate of a stock because it's free trading immediately, given that it's a life deal. Um, but that could basically result in a lot of selling if the people buying the flow through shares only buy them for tax purposes, right? That's the
Yep.
whole sort of double edged knife for of raising flow through shares. And that hasn't
Absolutely.
happened for you yet. And now you're telling me that there's sort of, an important player in the uranium market coming in buying those shares. Um, I mean, could we talk about them? I mean, is that something you can tell me more about? Like, who is it, and how do you know they're not gonna, turn around and just take the tax break?
Can't say who it is, but I can, and I can't say if they're just going to turn around and take the tax break. We
Hmm,
can't control the fate of what any investor does.
that's right.
I'm an investor in Baselode, and I can only control my own fate. And I've been long-term holder since day one.
Hmm,
But I can't control. Like, you're an investor. I can't control what you do.
sure.
I
Yeah.
have brother and sister invested in Baselode. I can't control what they do. Fortunately, they've also been long-term holders too. I have friends. Yeah, it's I can't control the fate of any investor. And the best way I think that we can leverage that though is with more exploration and more discovery potential.
Hmm. Okay. I'm stumbling over my words and my thoughts here because I'm just a very interesting point that says someone important, and I'm just running through names in my head as to who it might be. But I mean, I respect that you cannot tell me who it is. So, uh, we'll let people and myself wonder about this. We talked about drill plans about a month ago, and you sort of gave me an overview. You told me that half of this year's budget was going to Accio, and then the other half was going into greenfield exploration across the different projects. Is that still the plan? Is it still going to be a 50-50 split?
Pretty well, yeah.
Hmm.
It's a little bit more weighted towards Accio, but that's because we've increased the meters at Accio to account for drilling in the sandstone. We
Right.
want to
12,000
look,
meters, right?
yeah, yeah, up
Okay.
from 10,000 meters.
Good.
So
Okay.
we want to make sure that we don't leave that target untested, the unconformity target along the structure. We see plentiful evidence to support the logic behind there being unconformity mineralization at Accio, and we're not going to figure it out with a few drill holes. It needs its own substantive drill plan.
Hmm.
And so with this increased budget, that definitely helps it out. We can even take from the hook 4,000 meters and put a little bit into that as well.
Okay. How deep is that? Because you say
Shallow.
okay, right. So what is it?
Yeah, we
200-meter holes?
not even.
Hmm.
No.
So
We
there's
should
a
be
bunch of
pegging
holes that you're
anywhere
gonna
from
put.
100 to 150 exactly.
Okay. So like 15, this additional 2,000 meters is what, 15-ish new holes?
About that.
About that. Okay. Okay. And that's a new target that would otherwise not get tested if you hadn't done this race.
Correct.
Okay.
it would have been tested with a couple of holes, but again, knowing these systems, if you can see the smoke and it can lead to the fire, but it's very, very tricky. That smoke likes to go in many different directions.
Hmm. You've
So you can put a couple holes in there and just maybe walk away. I've seen things happen like that where people are well into the smoke, very close to the fire, but they decide that there's no fire and walk away.
right. It's like that image of the guy digging for diamonds in the never yeah, you've gotten quite poetic recently, James. Where's this target that you're talking about here? Where is that relative to the pods? Because I'm looking at the pods and you sort of have
East,
okay. So it's
east of the
east of the
pods.
pods, but you drilled
Yep.
there once, I believe, in 2021 or something like that, and there
To the
wasn't
north
much.
end. We drilled to the north. Well, we have drilled through the sandstone, but we've basically always been drilling from east to the west, where that's and typically we've been collaring into the sandstone. The structure of interest that we're after is right off here to the east. So we've
Hmm.
been overshooting that target, and we need to come back on that target and shoot that way. We need to shoot from west to east to hit that structure, and we need to hit it at certain levels, and we need to hit it where that structure intersects the unconformity, where it
Mm.
intersects that sandstone basement contact, that wedge. That's typically where you get these really ultra high grade uranium deposits. MacArthur River is a great example of that. 20% material within a smallest region imaginable, less than 100 meters in every direction volumetrically. It's crazy small, but 20% U3O8, and you can hide those things in between drill spacings very easily,
Mm.
and you
Right.
wouldn't know it. The you can be right beside ultra high grade uranium, never know it.
Yeah, there's an old saying that you can step right over it, basically.
Oh, I've seen
Sometimes
that
quite
plentiful
literally.
times. Oh, I've seen some interesting things in my career, especially in this uranium space. It's wild how close you can be. You can be meters away.
Mm.
Like, yeah, if you're standing on a high grade pod, you can reach out and touch the drill hole, and then the drill hole geochemistry comes back and says, "Yeah, there's nothing really here."
Mm.
Oh, I beg to differ.
Okay. What does that mean though for Accio if you find something? Because that pod, well, assuming for looking and all that, but that would be a separate pod and it would be quite far away from the other 9 pods that are sort of grouped together. Would that mean that there's potential mineralization in between too?
Possibly.
Hmm.
It depends on that sandstone, uh, the sandstone geometry, because then the pods would have to start. Well, you'd have to have more mineralization along the unconformity, basically. But given the structural nature of everything here, it doesn't have to. There doesn't have to be anything in the middle. There could be more stuff at depth, and that's again one of our theses that we have moving forward is that there's just simply more mineralization at depth.
But would that work with the general 2.0 thesis of what's, because nobody can agree
Yes.
on what's driving uranium mineralization in the basin? Um, would that still apply with your opinion on what's driving uranium mineralization
Well,
there?
yeah. It doesn't matter what's driving mineralization, just matters where the mineralization is, and the shallower the better. These if this unconformity target is true, we would still have shallow open pitable mineralization
Hmm.
based on open pits that were, you know, um, exploited between the 80s, 90s, and more recently as recent as 2008 in the Sioux pits. Their open pit uranium deposits go down to about 100 meters deeper, a little bit deeper, and they extract high grade uranium out of there. So it's not reinventing the wheel on this. We
Hmm.
don't need any we don't need any newfangled technology. This is tried, tested, proven true.
Hmm. Okay. And this is um, within the 12,000 meters, so within the big boy drill
Yeah.
program. But then you're also doing a 4,000 meter still on hook, not focused on growing Accio, but just going someplace else. Where's that someplace else? Where else on hook are you going?
We've got a few targets, a few to the north, to the south, definitely to the south. We've we've got multiple targets along the Hook superstructure. We'll have a video when we get closer to Hook, but it's a wonderful looking structure, and Accio is at the north end of this thing, 15
Hmm.
kilometers south along the structure, where the structure looks like it's starting to hit a damage zone. That probably won't make sense to a lot of people, but basically at the mirror image of the north end, where the structure doesn't become as tight and controlled. There's a little bit more structural disruptions to it. We have
Well, the
targets, multiple targets right in there, and like they occur as beads on a string, and that's
right.
typically how these deposits occur. You
Hmm.
can look at many different deposits all across the Athabasca, and they're pod, and they all occur along this string-like fashion, following the same structure.
Hmm.
So we've
So
got,
I'm sorry for interrupting, but it's just basically just so I know that I'm looking at the right thing. Is that it's a mag low corridor basically that you have on here.
yep,
Accio is its north end, and then it sort of follows down within the within the project. And on that mag low corridor is where you have some drill targets.
yep,
That
we
blue,
have a
it's
few of them.
blue on the map basically.
Yeah, yeah.
Okay. Okay. Yeah, understandable. There's a bunch of stuff on the
That
mag highs
that
actually.
Yeah, there are some interesting things on the mag highs, but that blue corridor is what led us to the Hook project to begin with. That
Hmm.
thing is a superstructure. It is huge, and it is not like all of the other north-south oriented structures in the whole Athabasca area. This is something special. I believe it links up to MacArthur River, but it's a scar on the face of the earth. And those are those deep structures that get remobilized and remobilized, and that's where you get fluids moving.
Hmm.
So
Right. That's the
if
same
the
structure
north, if
that GMZ
yep,
92 Energies thing is on. And so you
yep,
assume that that continues northwards from there on as well.
yep,
Hmm. It is quite big too. What is it, like 20 kilometers?
yeah, the main that main part of the structure though, like that blue that's on hook,
Hmm.
that is the main feature. That is the one that shows up bright as day.
Okay. Okay. Well, so you're putting some meters down there. Just maybe sort of to recap, you're starting off on Catharsis though, so this is a completely different project, not this one. You're starting off soon, actually, mid-February, in about 2 weeks. Then in May, you're going to Bear. That's a new project that you picked up last year, I believe.
Yep.
It's going to be your first drill program there, so interesting to see what's going to come out there. Um, if you get the permits, of course, because they're applied for, but you
Yep.
assume you're going to get it, as far as I understand. And then in
Yeah,
early.
and the indigenous on for bear are okay with it. We're just waiting on the government.
Okay, cool. And then, but the government is that's not a risk, or like, how do you see it?
Never seen the government not issuing permits,
Okay, good.
especially when there's indigenous consent. Yeah, I've
Hmm.
I've never seen them not hold withhold permits.
Right. Okay. And what do you? How many meters are you doing on Bear again? I have it on here
At
somewhere.
1500.
Oh, okay. So it's shallow again, just a couple of
Yep.
holes. Okay.
Yep. Eight to 10 drill holes. We've
Hmm.
got a few targets. We've got one major target that branches off into two different areas. So originally we were targeting just the main area to see if it would bear fruit. But again, if this is a larger structure, sometimes mineralization likes to occur on the edges of the structure. So we have to go in there and chase the two other parts of this potential structure. So it's basically three targets within one. We'll make sure we put in enough holes that we can walk away there confidently, either knowing that there will be something there that needs more exploration or not.
Right. Okay. So, but for now, this is sort of what they call high risk drilling. Only for you, the risk is maybe justified because it's not that big of a program. Is it helicopter as well on Bear?
Yep.
Okay.
Everything's helicoptered with
Mm.
baseload this year.
Okay. So, but that's still about $1.5 million for Bear, basically, they were
Yep.
budgeting. Okay. Okay. And then in early June, that's when the big boys drill program is expected to start on Accio, which is on the Hook project again. But that's not everything happening in Hook, because you have a little bit of again, that drilling along that corridor, geologist special drilling here. So pure exploration, that's 4,000 meters. So Hook is going to see 16,000 meters in total.
Yep. That's the idea.
Um, right, right. Okay. So yeah, I mean, but it's basically expecting a lot of news flow then, I assume. You're starting in 2 weeks and then takes 6 to 8 weeks to turn around. So 10 weeks-ish, you're expecting news on Catharsis, as far as I understand it.
Yeah. If we're really happy with any of the results, we've got radioactivity results that we could always release.
Hmm.
But otherwise, if we're hitting maybe Accio type material, we might hold off because we know that the market hasn't been appreciative of Accio as it is. But one never knows. Would like to put results out. Anything favorable, I think in this market will shine. I think
Hmm.
that there will be an appreciation, especially with Baselode's track record. I think it'd be better to bring things to the forefront.
Right. Okay. But so 8 to 10 weeks, if you have the assay results, that's
Yep.
still what,
Yeah.
like 2 months-ish, 2.5 months? What happens in the
About that. Yeah.
meantime? Any news?
Oh, well, in the meantime, I guess, so we should be active drilling until about the end of March. April, we take off just because of spring breakup, and then we'll be starting back up in May. So there's not too much of a lag time between end of Catharsis and starting up Bear
Hmm.
and starting on the Hook geophysics that we want to get done. So hopefully we get results back by April. Depends on how busy the lab is. I know that there are some programs up northern Saskatchewan that have been starting up, so they'll probably have their samples in. And but the lab is a bigger facility now, so hopefully they can keep things on that 4 week time frame.
Right. Okay.
And because we do have people coming and going every 2 weeks, we always bring the samples in. So as the drill program's probably still going, we should be having the first set of drill results coming out.
Hmm. Okay. Well, happy that you're not sending it up to Vancouver because those are going to be backed up too. Is it is one company doing all the drilling? What I'm asking basically is,
Yes.
are so they're going to have to move the drill around basically, or is it two
Two
drills?
drills.
Two
Two
drills.
drills.
Okay,
Two
good.
drills in the summertime. One drill for catharsis to start, and then Bear will start drilling, and that will be the drill that goes over and completes the hook exploration.
Okay.
Accio will start in January, or sorry, in June with a dedicated drill, and it will stay there probably until September 30th or mid-October, whenever we get done our meterage. If we need to drill that sandstone target, then the drill that would have done the hook exploration can come over and drill the sandstone target.
Right. Okay. Well, that makes sense. Still no shadow though. I'm assuming First Nations are not working with you, or like how's that developing?
It's not developing.
Hmm.
It's, in doldrums as it is, and just no real advancement on the project. So it is what it is, and we'll continue to try our best to move it forward.
What does that mean more specifically? Are you going up there? Are you talking to people? You're like,
We're talking with them. We've recently had a meeting with Chief and their consultants, I guess. Wasn't very favorable, but there is a path forward, and we just have to take those steps to get there. Right now, we're trying to communicate with the government about, some of the steps that we can basically prolong our exploration leases on the project, because this has been consultation has been prolonged in the area. That typically doesn't take this long. 3 months consultations, good to go. Uh, permits are issued. That's the typical Saskatchewan norm, and we've experienced that with all of the communities that we've dealt with as well. Just the one for Shadow, it's been definitely prolonged.
yeah,
Just trying to educate them with our approach, because I do think that our approach is different. Being helicopter based, we have very low footprints, very low presence in the area. It's very quick. It's very easy. You can come in and out, get out of there fast. A couple drill holes, we could be out. We could find out if our targets are worthwhile or not, and if they're not, we could be gone out of there for forever more. If they are, then we'd go back to the drawing board and continue consultation.
hmm.
But yeah, so right now, because the process has been prolonged, we don't want to lose our claims just based on the consultation process. So we're trying to discuss with the government what steps can we do to, put things on hold and prolong our claims,
And it's
which there are ways.
yeah. It'd be a shame too. I was just thinking of maybe there's a financial benefit in letting go of those claims, but they're not all that expensive in terms of work that you have to do there. So it makes sense to keep them. Um,
We have put expenditures into it though. We flew originally with an MT survey. We tried the groundwork, which we got booted out for,
yeah,
but that added a cost, and we've had little incidental costs throughout. So we have put money into the ground, and we don't want to see that money lost.
totally. Yeah, yeah, that makes sense. It's a difficult situation. So
Yeah. Oh,
I
absolutely.
keep following along with it. But you have plenty of other stuff going on, so I'm not
Yeah.
focusing on that. Just wondering what's happening. Something else that you have going on here is that you were talking about using exosphere by fleet, which of course, as any self-respecting human being would know after the age of one, is an high, innovative, high-resolution ground-based satellite-connected ambient noise tomography survey, short ANT. And I totally didn't read this off my screen. I just knew off the top of my head what it is. But just in case someone out there isn't totally sure on what that survey is, what is this? What are we talking about?
In some ways, a lot of people will consider it to be hokey pokey noise, and that's the whole idea of ambient noise. I guess I'll back up first. So MT, which is a survey that we've deployed many times and we love it specifically, is a form of electromagnetics. EM, but it relies on the natural EM currents within the Earth, which are produced by lightning strikes. So again, it sounds like hokey pokey, but it works, and it works wonderfully. I love MT. I think it's by far the best EM survey technique out there. So when this ANT came across our desk, both Cameron and I were very hesitant. We're very leery, thinking, don't really see much. And we saw some of the results that came out from other companies. We're still very leery. But then we watch, but the idea makes sense that there's a certain noise within the earth, and it's almost like a seismic, or it's like a seismic in a way that can pick up density contrast between rocks. And we've got that at Accio. The bulk of our mineralization is controlled along a structure that has a high dense material on the western side and a lower dense material on the eastern side. So we figure if this technology could map that contact and map out some of these structures that are along that contact or branching off from it at depth, then maybe we can find more mineralization with this. There are other surveys we could have tried, next being resistivity. But after seeing a presentation that was done from a former colleague that I worked for ages ago, man, I was still in university when I saw, well, when I worked for this guy, but he did a presentation on their results with Fleet, and it blew me away. Just how he saw the results from their survey, and then putting it up on their mineralization. I thought it worked very, very well. And so that was the big selling point, because I know this guy and I trust this guy. So yeah, really big selling point for me moving forward on that. And we decided to, let's give it a shot. If it works, great. If it doesn't work, we don't have to do it again.
Hmm.
We're looking at three major survey areas, two of them over the Accio and Accio extension area, again, trying to map out that contact, and then one further to the south in some of our drill targets down there. All of that gets done in May, have targets generated by June, ready to go.
Hmm. So you're gonna have Tiffany and Courtney working around the clock.
They already do. No, just kidding. But no, they'll be busy. There's no doubt.
Yeah. Yeah, I can
Yeah.
see how that's happened. But this sounds like one of these things that like they would drill like the deepest hole on Earth or whatever and send a microphone down there and then you still hear something and then
Yeah.
people think it's hell or whatever it might be. But
There
so
is a
it's basically
natural
a
noise to the
sound in
earth.
Earth and then you're
Yeah.
gonna listen for it and then it might help you find targets basically.
Yeah. And the whole principle exists as surface too. If you're outside if you're on the beachfront on a hot day and you're listening to people from the other side of the lake, you probably can't hear them. When
Hmm.
it gets quiet out, or not quiet, but when it gets cold outside at nighttime, the temperature decreases, so the air actually gets denser, and you can hear the people then. Like that's nothing new. And so with different density materials, will make your waves travel at different speeds. So like I said, in a way, it's like a seismic survey,
Hmm.
which is relying on the different speeds within different materials of that noise.
Hmm. Okay. This is some Neil deGrasse Tyson type of thing. Um, but and luckily for me, I'm a uranium investor, so I'm never on an actual beachfront. But let's maybe I'm picking up the financing part again because we're talking about money. I'm trying to listen to your words more carefully this time. But all of this is the money is basically you can complete all that work. You don't need to raise capital. But if the opportunity is there to say drill shadow or expand the drill program, would you raise more money? Like if more money fell on your lap, are you gonna take it or are you gonna say no?
Right now, no. No,
Hmm.
we've officially committed to what we want to do. We had these plans. So when we started planning for last year, we started with the big picture envelope. And basically, this is what we're getting to right now. With this recent raise, we can capture the entire big picture envelope. We kept taking things away, but we were still happy with what we had. We knew that we would have results that could deliver for investors. But again, with a lot of things on the go and never know what's going to happen in the marketplace, we wanted to make sure we can deliver the best the baseload can deliver for investors, not just a half-assed run at things. Let's do this properly.
Hmm. Okay.
I,
Right.
I've worked for companies. I've worked for companies that do try to cheap out and be very limited, and you try to hit these big successes with one drill hole or one program. They don't work out. They don't
Right.
work out. You
Hmm.
you need to put more effort into exploration to be very successful.
I think, yeah. No, well, I agree with that, especially when you're raising at a premium, as you said, you're getting someone in who you wanted in the deal, a bunch of things that I wrote down. So I'm happy with those answers. What, in the meantime, you're also drilling on, and this is not something baseload is doing. So this is not baseload money. This is metal energy money. But this is not well, another one of your deals. You're CEO of that company as well. What's that going to mean for your focus on baseload? 'Cause this is a huge drill the biggest drill program you've ever done so far in the history of baseload. It's going to take 120% of your focus. And then you also have that thing going on in merge. How are you managing that?
Merge is active right now
Hmm.
with baseload not active. The two kind of balance back and forth.
Okay.
But baseload, I've got the most reliable crew I could ever imagine. Cameron as our VP, Courtney and Tiffany as our project managers are phenomenal, and I have 110% trust in all of them. So they take a lot off my plate. As long as I see daily updates and understand what we're drilling, where we're drilling, when we're drilling, I'm good with that. I've already helped out a lot with the pre-planning. I feel like I've done my logistical, technical side of things. From here on in, it's all on their hands, and I just keep running the company day to day,
Right.
which I do concurrently with Metal Energy as it is anyway.
Hmm.
So the day to days really don't change for me. Metal Energy, after this drill program, we'll look at the results, see how the market reacts. If we go forward with bigger and more, then I bring on more people to take over a lot of those responsibilities. Again, so I'm kept in the loop. I'm kept aware of what's going on, but I do the day to day company management, marketing, IR type of stuff.
Hmm. Okay. Sure. Do you still have
I've
chef?
done a lot of technical work. I've done 15 years plus of technical work. That's not my job anymore. I
Okay.
love it. Don't get me wrong. I would love to be a guy who goes up into the field every day, but then I wouldn't be able to handle doing this and going up in the field. Those are long days.
Hmm. And four kids.
And 4 kids. They take up a lot of time.
Yeah, no, sure. All right, but kids aside, James, I'm looking forward to that drilling at Catharsis too. It's going to be interesting. It could get interesting, and I hope the market finally starts caring. Although the market doesn't always do what I hope it should do. So, anyways, in the meantime, I'm moving up the market cap here with FPX Corp, a nickel development company with an advanced stage PFS state asset in BC, Canada. The company is listed on the TSX Ventures Exchange under the ticker symbol FPX, where an average of about 115,000 shares trade each day, with a 52-week high of 61 cents and a 52-week low of about 26 cents. With a market cap of about $85 million, Canadian dollars, that is, at the time of recording of this video, and about 274 million shares outstanding. Today, this is a 31-cent stock. There are no warrants at all, but there are some options out there, leaving the number of fully diluted shares at give or take around 300 million. 14% of those shares are in the hands of management and directors. 19% are in the hands of high net worth individuals. Since very recently, Sumitomo, the Japanese mining giant, owns almost 10%, or 9.9% to be specific. And then another almost 20% is in the hands of other strategic partners, including Outokumpu, which is Europe's largest stainless steel company. And it will make sense in a while why that matters for the company and just generally why I call it strategic. But all of that basically leaves about a third or so of the flow to retail and institutional investors. As of the last financial statement, which is dated September 30th, the company had about $32.5 million in current assets, most of which in actual cash and some account receivables, as well as some prepaid expenses next to that. That sat on the balance sheet against current liabilities of about $1 million, mostly in the form of account payables, and also a small part made up by the current portion of the lease liability. Interestingly, there is also no long-term debt. As it always is, though, you want to go to setterplus.ca and see for yourself for the most up-to-date financial data, though, because after this statement was published, FPX has closed a $14.5 million financing with Sumitomo, that Japanese mining company that I told you about. So the financial situation potentially will look a bit different by the time you're watching this. Although not actively drilling at the current moment, they are doing some exploration work while also keeping the lights on is never cheap. And so FPX spent about $250,000 a month over the first 9 months of the year of last fiscal year. That is on sort of general business expenses, wages, salaries, and again keeping the lights on and stuff like that. Um, Boring stuff and numbers aside, there is one project that is of main interest here, and that's the Car Nickel District. As I said, it's in central BC because why I'm saying that's of importance is because on it we find a Baptist or Baptiste, if you want to be French about it, um, deposit. And last year the company released a PFS on it. It's a preliminary feasibility study aimed at basically showing what the project could turn into. Through years of development, building in mine, and so on and so forth. More specifically, this document outlined an open pit mine with a 29-year life of mine at an average annual production of 59,100 tons of nickel concentrate. And it suggested a phased approach basically to building this mine with an initial phase one mill of 108,000 tons per day of throughput capacity, followed by an expansion to 162,000 TPD with the caveat, of course, or with the goal better said here, that this expansion is expected to be funded by the cash flow coming from the mine, from the initial starter pit, which should start coming in. Basically, that cash flow should start coming in after the $2.2 billion initial capex has been paid back. Which again, FPX says that it's going to take 3.7 years. So 3.7 years after operations have started, which is of course the payback period off that initial capex, assuming an $8.75 per pound nickel price is achievable during those 3.7 years. If that price, the $8.75 nickel price, is attainable during the entire 29-year LOM, though, that would result in an after-tax NPV of $2 billion. It's an NPV 8 too, by the way. And also an internal rate of return of 18.6% and an annual that is pre-tax free cash flow of almost 580 million US dollars. Those economics are achievable because of a combination of a few things, of course, as it always is, but notably so because of the presence of as I alluded earlier, a conceptual starter pit, which is much closer to surface and also much higher grade than the average for the LOM. But also because over the life of mine, we're talking about a 0.5 strip ratio. And so a simple magnetic to flotation recovery method resulting in an 88.7% recovery of a high grade. So we're talking over 60% nickel product with low impurities, which is, well, according to this PFS, it's going to be sold directly to stainless steel producers and thus bypassing the smelters, which typically are there in the nickel production process, and therefore getting more money out of the process that way. Now, that's the basics of what the deposit looked like at the time of this study, which is basically a snapshot in time. However, important to know here is that FPX believes that there is more potential to this whole district, what they call here. The mineralization of which, by the way, is, first of all, it is low grade. That should be noted, but it's about 0.21% of nickel. But it occurs in a mineral called awarenite, which is a naturally occurring nickel iron alloy. So it's neither sulfide nor it's a laterite. And why that matters is because this same mineral has been found in several areas across the 245 square kilometer land package that the company is currently sitting on. So they believe that there is potential for multiple deposits like the Baptist in this land package. Like, for example, the Van target, which is located about 6 kilometers north of Baptist, and it only has seen about 5,000 meters of drilling. Whereas to define Baptist, FPX drilled over 33,000 meters. Talking of which, by the way, reminds me that now might be a good time for me to start thinking about shutting up and ask Martin, now it's on to you, and ask you basically, that this might be a sort of a soup of questions, if we will. So give me some rope here. But what I'm wondering is, what is the overarching strategy for this company basically, and how has that evolved over 2023? Because as I understand it, you believe that the most likely exit scenario here is to have an exit to a large mining company because the deposit allows it, as you've mentioned before. But in the meantime, um, do you want to keep building out Baptiste and potentially get to a point where someone, a potential acquirer, only has to push the button of the starter pit operations with a smaller mill? Or do you want to go to the van target and the other targets and find a few more Baptiste size ore bodies that you can then sell for a higher price? So yeah, talk to me about that.
Yeah, thanks for the question, the intro there, Antonio. So in terms of overall strategy of the company, just stepping back for a second from the project itself, I think we're of the view that the world does need to start thinking about building new nickel mine supply outside of Indonesia. Almost all the growth in nickel over the last decade has come in Indonesia. It's been very impressive growth, but the rest of the world also needs to start thinking about diversifying its supply chain away from the Chinese and the Russian forces that currently dominate the space. So within that context, then, which are the companies who have projects that can feasibly come into production at some point over the next decade outside of that Chinese, Indonesian, Russian axis?
Mhm.
And we certainly believe that Baptiste ranks very highly among the list of the best projects out there in terms of its scale, its potential to produce nickel at a low cost with a large low carbon footprint, and for quite a long mine life at 29 years. However, in this cycle, let's say over the last 10 years in the nickel business and more broadly in base metals, we really haven't seen a lot of M&A whereby large diversified companies are acquiring junior companies, exploring and advancing projects. I do think that's the ultimate outcome for our company, but we're not, I think, at the point of the cycle where we're seeing a lot of that happening. So for a company like us, in the meantime, then I think the most important thing is to kind of advance the project with a tier one operator's mentality. That is, do the test work, do the drilling, do the engineering studies, advanced on local community and First Nations engagement in a manner in which a tier one operator would, so that as the project continues to advance, it gets de-risked, and it ultimately has a data set and a heritage, a tier one type of heritage, so that when that acquisition opportunity arises, whereby there's a reasonable offer made for the company that provides value to shareholders, we're in a position to want to activate on that. I think it's very difficult to count on M&A as a strategy, and certainly not unless you're willing to advance the project to that tier one standard. And that really is our goal within our team every day for how we advance things. From a strategic standpoint, the Baptiste deposit, as you alluded to, is a very large deposit. It's one of the world's largest undeveloped nickel deposits. We do, as you noted, see very obviously the opportunity to add nickel tonnage to that at the Van target. Most specifically, we made a discovery there a couple of years ago, which we're very excited about. But in all transparency, the market has never really provided much reward to us in terms of any kind of accretion in our share price as a result or owing to that discovery. So while we think there's an opportunity here to clearly delineate a multi-generational nickel mining camp development opportunity here, we're also mindful of wanting to kind of manage the treasury carefully, particularly in today's market, and not sort of over drill up the project, particularly where the capital markets are not rewarding that. So within that context, really the main focus of the company has been in 2023 and will be in all likelihood in 2024 and into 2025, the development of Baptiste closer and closer to that ultimate construction decision.
Hmm. What does that mean specifically for 2024? Like, what do you have to, is it mostly sort of a paperwork type of year? Are you going to be doing any other field work or something like that?
Yeah, so the critical path of the project, now that the PFS has been completed, the critical path really rests through the environmental assessment or permitting process.
Hmm.
Ahead of that, though, is continued engagement activities with the local community, and most specifically the various First Nations that are impacted by the footprint of the project, both by the mineral claims themselves and the envisioned project footprint at site, as well as some of the key pieces of offsite infrastructure, including the power line and the access road. So a big focus of the company is on those engagement efforts, because those engagement efforts need to be advanced further before we ultimately enter into that EA process. So for a project like ours, the critical path really has shifted away from the typical, drilling and engineering studies that you might find for earlier stage companies, and it really rests more directly now on that engagement and environmental and cultural study side.
So in terms of like not even geotechnical drilling or anything else among those lines?
No, we do have a field season planned this year. The main focus of that would be what are called hydrogeological holes. That is basically drilling wells to measure water flows in the subsurface. That's the main focus of drilling activities this year. We'll also have, quite a bit of field activities ongoing around collection of environmental and cultural baseline data. This will be our third consecutive year of advancing that data collection, again, to ultimately support that entry into the environmental assessment process.
And in the meantime, you're going to have people up in trees looking at birds, I assume, to sort of describe what else is on the project.
That's correct. So the full suite of typical environmental data collection around, water bodies, fish, flora and fauna, right across the whole spectrum of all the abundant data that does need to be collected to really inform, one, our engagement activities with First Nations and the wider local community, as well as interface with the government as we potentially ramp into a formal EA entry here later in 2024.
Right. And so that gets me thinking about the why of it all, meaning you have what I assume right now is between 40 and 45 million bucks. You spend, as I said, about 250,000 bucks a month outside of share-based compensation. So that's 3 million bucks a year. You have plenty of money to do all that and then also go to the van target in the meantime. Why not?
Yeah, so just to reset on expenditures there, you mentioned kind of the expenses that are expensed on our income statement, on our P&L, but we also capitalize expenses incurred on the project to the balance sheet. So our expenditures over the course of 2023 were collectively something in the range of $15 million, so quite a bit higher than that assumption there. For 2024, the budget is in the region of $18 to $20 million. So, advancing a project of this scale, conducting these environmental assessment activities, the engineering studies, trade-off studies, metallurgical test work, all of which are continue to be ongoing. Advancing a project of this scale is typically at least a $15 to $20 million per year endeavor. So based on the current treasury, we see ourselves as funded through 2024 and 2025. But believe you me, there's no shortage of work. And, again, with respect to the van target, we had, again, as I mentioned, in 2021, we made a major discovery of a new nickel deposit there, where the tonnage and the grade profile is starting to suggest something like what we have at Baptiste already. And Baptiste we view as, it is sort of a $2 billion NPV type of project. So you would like to think that in better market conditions that you would get a reward for that. Imagine if you were in a different type of company. Let's say you were advancing a large porphyry copper deposit. Let's say that was one of the world's largest porphyry copper deposits. If you made a discovery of a new porphyry copper deposit 4 or 5 kilometers, 6 kilometers away, would the market give you a positive reaction? In some cases, yes. In other cases, and I think it's a sign of somewhat the market conditions we're in, people might shrug their shoulders and say, well, it's just more of the same. Yes, it adds mine life beyond year 30, but if you discount that back at today's relatively high interest rate environment, it's of nominal additional value. And that's, I think, is the way that the market has kind of treated our discovery at Van over the last couple of years. It's of interest. It certainly shows that there's a district scale land package here that can support multiple generations of mining. But at the end of the day, if the market is not going to give you value for the work that you do, I think you need to think long and hard about whether you do additional work in that direction, or put another way, when you choose to do that work. And I think as a function of market conditions, doing additional drilling at Van right now is just not the right thing for to create shareholder value.
You have what, 5,000 meters in it. I'm assuming that basically doubling the meterage that you have in it will cost you what, 2 to 4 million bucks ish, depending on what you're paying per meter. Um, in the grand scheme of things, that's not a whole lot of money for you. And so I'm thinking like if you did that, wouldn't that help you keep basically shareholders engaged and happy that there's something coming? Because this is what, is called the boring part of the Lassonde curve for a reason. So that's where I'm coming from, and maybe you can talk to me more about that.
I think it's a tension for sure that companies like ours face. Multiple different points of tension there. Yes, wanting to generate news flow to keep excitement in the story, wanting to add value by adding a new discovery, balancing that with how does the market actually react? We have 2 years of lived experience of having put very positive results out on Van and seeing limited value created in terms of share price appreciation. We know enough now, have been through enough due diligence processes with large counterparties to know that on their side of the table they see that multi-generational potential. I think we've done enough work at Van there to kind of tease that out to sort of to demonstrate that there's real continued blue sky potential there. But at the end of the day, I'm not of the view that $2 to $4 million is a small amount of money. It would represent relatively significant dilution to our shareholders to go out and continue to raise to do work that is not necessarily going to translate into share price appreciation in the short term. In the long term, I still think we have a very compelling story there with Van, but I think one of the hallmarks for a management approach, certainly since I've been with the company for the last 8 years, is we are very, very focused on maintaining a healthy treasury and really managing that treasury even through difficult market conditions and really calibrating our work as a result of that.
Right, but at the end of the year, you're still gonna have, you said about 18 million bucks is what you're budgeting. Does that include G&A, by the way? Because when I said the 250 a month, I was only talking about G&A. But so does the 18 million bucks you told me about, does that include G&A?
It does, yeah.
Okay. Well, so but you're still gonna have over 20 million bucks at the end of the year, right?
That's correct.
Okay.
Yeah. So, at the same time, we don't know what the future holds. We don't know what the future holds in terms of the nickel price. Will it be higher or lower? What will the interest rate environment in the economy be? What will the state of the junior markets be? And I think it's been, for the most part, certainly since I've been running the company, the right play has been to assume that the market will continue to be challenging for companies like ours. And so the ability to have a very robust treasury puts us in a very advantageous place vis-a-vis the vast majority of our peer group.
Right. Where I'm coming from with this is exactly that you don't know what the market is going to do next. But what if it didn't go down? Like, what if something happens? There's another nickel squeeze, only this time it goes on for longer. Do you have the readiness to organize a small, well, what to you would be a small drill program, maybe like a 5,000 meter drill program? Like, do you have the drill targets ready, and can you have drills on site within like 2 to 3 months if there's another nickel craze, so that you can sort of feed news into that market?
No, because in order to do the additional drilling at Van, we would need to submit another notice of work or permit application here. The timelines on that are probably in the range of 3 to 4 months, typically at a minimum here in BC. And one of the things I'm seeing here is that yes, we won't necessarily have news results from an exploration standpoint this year, but we will have no shortage of news flow. I would estimate that over the course of the year, we'll probably have a news release in the market every 2 to 3 weeks at a minimum. And so, no shortage of things going on with the company, both from a strategic standpoint and with respect to fundamental project advancement and development to continue to feed the beast.
That last point right there is interesting. So I'm writing it down there. We're going to come back to that strategic point that you made here, but you're making me think about, so you will need you'll need to apply for another permit to go back to Van. How far up the process are you permitted on Baptist right now in terms of First Nations, but then everything else as well?
Yeah, so at Baptiste, certainly from an exploration standpoint, we have what we need, obviously, to have completed the preliminary feasibility study. We will need additional permits in order to execute on infill drilling and other technical drilling, geomechanical drilling, for example, in the pit. But we don't envision doing that in 2024. That's more of a 2025 activity that would then feed into the kickoff of the feasibility study thereafter. As I mentioned, the real focus of the company is on continuing to build this data set and those engagement activities, because the critical path of the project really rests on getting into and ultimately through the environmental assessment process. With that in mind, we do have a planned hydrogeological program, as I mentioned earlier. We'll be submitting a notice of work application for that in coming weeks, and we expect to be in a good position to do that work this summer. Again, also continuing to do the work on the ground from an environmental, cultural baseline data collection standpoint. So we're well positioned there from an engagement standpoint to be ready to execute that work this year.
Right. Okay. How many First Nations are you dealing with again?
Yeah, so the wider Dakar Nickel District mineral claims, they sit on the traditional and unceded territories of 4 nations. And then with respect to the offsite infrastructure requirements, depending on the routing of the power line and the ultimate, the power line is the key kind of dependency. That would likely bring in at least 3 other First Nations into our engagement activities. So depending on whether those nations sit either with whether they're impacted by the mineral claims or by the offsite infrastructure, we're at various stages of engagement. Those that on whose territory the mineral claims sit, we typically have a much longer history of engagement, dating back in some cases to 2008, 2009. So going on 15 years now. With some of the nations that are impacted by the offsite infrastructure, those engagement activities are just kicking off this year. Where we would like to be by the end of 2024, ideally, is in a place where we have agreements in place with all of the impacted nations, or what are called participating nations, from an environmental assessment standpoint. And those agreements would really establish the framework by which we would work with each of those nations in turn as we go through that EA process. So the real focus here is to, one, build on the existing relationships that we already have with some of the key nations that are impacted by the mineral claims, as well as to expand those efforts to some of those downstream communities. And again, the measure of success, I think, on that would be having agreements in place with each of those nations by the end of this year to allow entry into that EA process ultimately.
So basically all 7 of them have to say yes to that process.
At the end of the day, there's a couple of things. So regulatory decisions are made by the province and the federal government. We as a company, though, are committed to the principles of the United Nations Declaration on the Rights of Indigenous People, which has as a fundamental concept that of the concept of free, prior, and informed consent by Indigenous rights holders on development activities happening in their territory. So yes, ultimately, we are committed to this concept that all participating Indigenous nations would need to provide their consent for our activities. Yes.
Do all of them have a history of mining? Like, are they familiar with mining? Because I know that there's a couple of mines not too far away from you, but have all 7 of them been in touch or worked with mining companies before?
Not in all cases, no. Certainly no in the context of the, let's say, modern mining and engagement practices. Some do, but not all of them. And that is certainly part of our opportunity here in working with them, is to, on the one hand, learn from them about how they use the land, what the potential impacts of our project could be, and on the other hand, also share information about how we want to advance the project as a modern mining company. But there are not a high number of operating mines with which all of these nations are familiar that I would characterize as modern. In some cases, it's mines that may go back to the middle of the 20th century, and so practices then are certainly fundamentally different than they are now.
Right. Okay. Well, I'm asking this, or where I'm coming from with this is because I imagine, this is just me going out on a limb basically, or just speculating here, but I imagine that a potential acquirer for you would be someone who's very ESG aware, if you will, a mining company who really cares deeply about that because you have, as you've mentioned, um, low CO2 mining basically, and then all those type of things are trying to do right, which to me suggests that you're preparing this for someone who is very ESG. Yeah, I'm losing the word, but I'll call it aware. Um, do you think that's necessarily the case?
Yeah, I listen. I think all of there are, in the region of 10 to 12 large diversified Western mining companies for whom a project like this ticks the boxes from a scale, a cost curve, a carbon curve, and generally an ESG profile. And all those companies, by and large, are committed to things like transitioning to net zero operations by 2040 or 2050. We think this project fits very well within that wider strategic move within the mining industry to try to make our industry net zero. And as you're well aware, these large companies make commitments around how they deal with local communities, their carbon footprint, their practices around labor standards, procurement standards, et cetera, trying to be at the highest levels of industrial activity. And so it just so happens that our project also meets the sort of the scale requirements for companies like that. So that's ultimately where I see the fit, is both from a scale and economic standpoint, also meeting with the ESG kind of requirements that modern mining companies have.
So what I understand from that is that while sometimes it could mean higher costs to sort of go the extra ESG mile, you're willing to do that because you think that eventually it translates into a higher premium or just more shareholder value during an exit. Is that right?
Yeah, I think that's a key theme for our sector generally. We see it in the aluminum space, for example, where sort of low carbon Canadian production can yield a higher premium in the world market. We have our own experience with that. As you mentioned, we received an investment from Outokumpu, which is Europe's largest stainless steel company last year. Now, Outokumpu is a very interesting case study from this standpoint. They have to compete primarily with Chinese production of stainless steel. And stainless steel is basically the Chinese version, or the version produced by Outokumpu is effectively identical in terms of its specifications and its functionality. However, Outokumpu is able to get a higher price for its product vis-a-vis the Chinese alternative because it is a very low carbon product made to very high ESG standards. And so Outokumpu's customers are willing to pay more for that product than they would for a similar Chinese product made with a lower standard or a higher carbon footprint. And so there's no reason why if downstream customers like Outokumpu yield a premium for a product that is low carbon and has a high ESG profile, there's no reason that the mining companies out there can't also exert that same opportunity with respect to their products. And so while it doesn't yet appear, let's say, in the context of, for example, a green premium LME contract for nickel, at the end of the day, what we do find is in bespoke negotiations between producers of responsibly sourced commodities like nickel, copper, et cetera, that going forward, when in those discussions with downstream consumers, that producers like those operating in Canada, for example, which has that low carbon advantage, will absolutely be able to exert more pressure and ultimately yield a higher price per pound or per ton than a generic product made to lower standards elsewhere in the world.
Where I'm coming from with that part of the question, or where I've been trying to lead the discussion to, is again, what values does the market realize? Because we were talking previously about drilling on the van target, and you said maybe the market's not going to give you value for that. I'd argue that the market is not giving you any value for the ESG stuff either, because an $85 million market cap and a $2 billion NPV. I mean, the market doesn't really agree with what you're telling me here about ESG, and you might ask, but why does that even care? You've previously said that you don't want to finance in a traditional market financing way anymore, or that you don't even think they're going to have to do that because you have plenty of strategics taking interest in you and so on and so forth. But what I'm thinking is, if this is the situation here, how do you protect this asset, assuming that it's desired among the majors because of its ESG profile? How do you protect it for not being taken over for, say, $100 million or even $150 million, which would still be a very large discount to your NAV?
Yeah, that is a primary consideration. It's something that that keeps us up at night in terms of not ensuring that the market ultimately recognizes the asset for what it's worth and providing us an appropriate valuation. I'll come back to that point in a second, but in terms of the ESG piece and whether the market buys it or not, whether the market is willing to value companies with that dimension appropriately, I totally agree with you. In today's market, particularly in light of what we've seen with sort of a bit of a backlash against ESG in the markets over the last couple of years, I totally agree with you. At the end of the day, it's a bit of the show me the money thing. You can tell me, a company can tell me all day long that yes, they have ISG standards and that's going to get them a premium for their product. But unless it's something that you can clearly demonstrate through a contract that you can hold up in the air, or through, like I say, a global LME based or other exchange based pricing mechanism, it is somewhat opaque to the market, and the market will not value it unless it's glaringly and blatantly obvious to them. In terms of our disconnect between the market value of the company and let's say the NPV of the project, as you mentioned, it is glaring. It is a very large disconnect. I think that has less to do with whether the market believes our ESG credentials, and a lot more to do with how the market views a low grade, relatively high capex nickel deposit, one where the nickel is in a novel form, where it's not in a well-known form like sulfide or laterite. That's where our communication efforts with the market around explaining this type of nickel deposit and the advantages that it has from a technical standpoint, that obviously continues to be something we need to focus on and work harder on. But we do view that the investments we've gotten from three large strategic counterparties over the last year has not been recognized as what it should be, which is really a fundamental validation of the technical and economic feasibility of this style of mineralization that we're focused on.
Do you, if you don't believe that, and I would obviously tend to agree with you that the market is not giving you any value for the van target, or for van as you would call it, would it be possible for you to sell it, option it out or something? Or do you really think that Baptiste has to go together with van during a sale, during an exit, basically?
There's no reason why the van target or the couldn't be split out or spun off from the Baptiste deposit. That's certainly something that we think about from time to time in order to kind of drive value. We have other earlier stage exploration targets in BC and the Yukon that we're very interested in. And so there are these other elements of the business. We have an exploration joint venture looking for nickel globally with JOGMEC, which is effectively the Japanese government. Those are all other aspects to our business which we don't think are being properly valued in the market at all. And so the concept of a spin out or something that drives shareholder value and brings to surface the value of everything outside of Baptiste is certainly something of interest to us. It's not something we're going to pursue in the very short term, but certainly think about things from an M&A standpoint. We see that there could be an opportunity there to continue to drive value by taking some of those assets and not including them in that type of strategic outcome.
But that's not on the table for 2024. Like, that's not potential for 2024. I assume if the opportunity came along, you'd do it, but I mean, you're not necessarily planning it for this year.
That's correct.
Okay, good. Are you planning on seeking out another strategic partner, maybe to sort of balance Sumitomo, though? Because we're still on the topic of what if someone makes an offer or an attempt at taking you over at these valuations? How do you balance them against them? And they're sure they're not a blocking interest, but still a good chunk at 9.9%. So is the goal for 2024 then to find another strategic to balance them out?
Not necessarily. As you mentioned, we do have quite a bit of cash working capital now. We really won't need to raise money for at least another year and a half. So we're in a good position from that standpoint. At the same time, we continue to see a high degree of inbound interest from large strategic groups. And when I mean strategic, I mean truly strategic capital, not financial capital, not capital that is motivated by return on buying shares. It's groups that want an entry into either ultimately acquiring the asset from us, or B, getting their hands on sort of offtake rights with respect to future nickel production. So those strategic groups include large diversified mining companies. They include stainless steel companies, as we have with Outokumpu. And then in the EV battery supply chain, there's chemical companies, battery companies, and the automotive companies, the automakers themselves. So one of the things that I think that people are really missing about stories like FPX right now is that there's been this huge broadening of the pool of potential acquirers or funders of projects like ours. So when I say in other interviews that I don't think we'll have to raise money in the general capital markets ever again, and that we'll always be able to raise it from strategic sources, it's that we've had this 4 or 5-fold increase in the number of strategic or corporate entities or corporate company types that are interested in nickel projects. Again, I've been running this company for 8 years. 3-4 years ago, the only companies we talked to that were truly strategic in nature were large diversified mining companies. And there are, as I said, maybe 10 or 12 of those that could have potential interest in a company like ours. There's now at least 4 or 5 times that many of companies who are involved in other parts of the nickel supply chain who have shown the interest and have actually executed on making investments in FPX. So we're not necessarily going out and trying to find new strategic investors, but they continue to knock on our door. And every time that we've raised money with those groups over the last 15 months, we've done it at significant premiums to our prevailing market price. So first, in the fourth quarter of 2022, we raised at a 27% premium to the market price, to the share price. In the second quarter of 2023, we raised at a 40% premium, and just recently with the Sumitomo investment at a 70% premium. Now, I would defy you, Antonio, to tell me any company in the last 15 months in our sector who's been able to raise money 3 times at those types of valuations over and above their current share price. What that tells you is that there is a clear disconnect in how the strategic groups are valuing this project and how the market is, how typical retail and small institutional fund managers are. One of the things I think about this sector is that we know that the sector and any company is rarely ever priced on a rational basis. Okay, the pricing of these companies is almost always irrational. Now, with respect to FPX, currently we're raising money at 48 cents from one of the largest, mining and metal processing companies in the world, but the market retail institutional investors continue to price the shares at 31 cents. You tell me which is the rational view of how the project should be viewed.
Yeah, you could almost say that it's but there's plenty of disadvantages to how the market is set up in Canada right now. But then maybe there's advantages because if someone like Sumitomo wants to come in, they basically don't have any other choice but to come to you and say, hey, we want a chunk of the company. Like they cannot buy in the open market, otherwise the price is going to shoot way ahead of themselves. And so you get to dictate maybe the pricing of those shares. So that's an advantage. And another advantage is that you mentioned broader pool of capital. And free money is always good money. That's what my dad always told me. You receive $725,000 from the Canadian government as basically again, free money. And although in absolute terms it's a large amount of money, it's not a whole lot of money in the grand scheme of things. So, do you think they start coming in for larger amounts? Is that something that you're applying for in 2024? Is there even something available? Talk to me about that.
Yeah, so you're right. It's not a lot of money, but it definitely shows that the project is of interest to the Canadian government. That was, despite the fact that it was a relatively small amount of money, was a very competitive process. There were about 250 companies who applied for that stream of funding, and only 6 companies were successful, including FPX. So that should tell you a little bit something about how we stand out against the peer group. In terms of other sources of funding, in terms of grants and that sort of thing, there are two other and soon to be, I think, three main opportunities that the federal government is making available to companies like us to at least apply for. The first is something called the Strategic Innovation Fund, or SIF, that is funding that is designed in part to support the development of critical minerals projects in Canada. That's something where we've been engaged with the government over the course of the last year. Certainly no strong view as to whether or not we'll get money on that. These tend to be sort of long processes of discussion and application. The second, more recently announced branch of funding, a stream of funding, is called the Critical Minerals Infrastructure Fund. That is funding both feasibility study work and actual execution on infrastructure projects for critical minerals development in Canada. We will definitely be applying to that and feel that we have a good chance of potentially getting significant grant money that could be into the millions of dollars there. And then the last opportunity, the newer opportunity, is something called the Canada Growth Fund. That is a much larger pool of capital that could provide significantly additional funding outside of just hundreds of thousands, or even in the single-digit millions, but in the double or even triple-digit millions of dollars for critical mineral projects in Canada. So these are the kind of the suite of opportunities that are available currently for Canadian companies, to pursue. And we feel like we're well positioned to do that, again, leveraging off of the success we had last year with the feds.
Right. And is it sort of the same amount of money that we're talking about in that range of, let's call it around $1 million, or are those smaller or bigger opportunities here?
Yeah, the critical minerals funding, the infrastructure funding, is probably something where applications could yield, in the region of $2 to $3 million for a company like ours for feasibility study work. The Strategic Innovation Fund is more in the tens of millions. So would the Canada Growth Fund be as a minimum? But there's all kinds of different sort of, suitability, eligibility requirements, and a very long application process in all of those cases.
Looking at the critical minerals chart in the US, I'm also seeing nickel high up there, basically. Is that something that you think is going to be available in the future, like getting financing for a Canadian project from the US government in any way?
Yeah, so we've been on this for a while with the U.S. Department of Defense. So the U.S. Department of Energy, or the DOE, has been providing funding sort of at the project finance stage for projects in the United States. And the DOE funding is very specific, that it's geared only to projects in the United States. The Department of Defense, or DOD funding, has, from the beginning, they have said that they are willing to consider funding of projects in Canada and in Australia as well. But to date, that DOD funding and all of the awards they've made have only been to US-based projects. So we've always had a question in our minds, frankly, as our advisors have had from a political standpoint, our sort of lobbying advisors, a real question mark as to whether the US would actually provide funding to foreign projects, even though Canada is viewed as obviously very closely allied. And so we'll continue to have that question. We'll continue to pursue that funding, but I wouldn't put high likelihood on it right now. The Canadian projects will actually be able to unlock, U.S. taxpayer dollars at the end of the day.
Right, right. And then at the same time, it also seems like the Japanese are very interested. You have Sumitomo. There's a bunch of groups, basically. You have, was it Toyota's battery company? That just to make it simple for my 5-year-old brain here. And then you have JOGMEC, as you mentioned, and Sumitomo. Is that actually? I know that on paper it isn't, but is it like in real life sort of a coordinated effort? Like, do these companies talk together? Are they doing this sort of as a group, or like, how does that work?
It's not necessarily coordinated between the companies, between, let's say, as you mentioned, Toyota's battery company and Sumitomo. Toyota's battery company is a customer of Sumitomo's. So they do collaborate, but then they're also competitive in any kind of customer and client or customer and service provider relationship would be. I would say more generally, though, what we've observed with Japanese entities is since sort of the second quarter of 2023, there has been a dramatic tone change and a shift in how urgent those groups are in securing future sources of critical minerals like nickel. And the way that I view it is I think there have been larger strategic discussions, probably within the government of Japan, working with industry to say, listen, our car industry here is under threat from the rise of Chinese auto production. And the Chinese have gotten out ahead of the rest of the world in securing critical minerals for that supply chain. We need to respond accordingly. We need to start making outbound investment. Japan obviously has a long history of making outbound investment in the mining industry to secure raw materials for its industry. This is just the latest volley of that, but I'd say the temperature has definitely been turned up, and we've seen that, as you mentioned, 3 different large Japanese groups having formed alliances with us or made investments in us over the course of the last sort of 10 months now.
Do you think that, I don't even know how to formulate this or just say it, but do you think that scares off investment from other potential parties like the Saudi fund, for example, or any other party that might want to get involved? I'm not counting the Chinese because I don't assume that's really going to be possible in Canada anytime soon. But yeah, is the Japanese presence in your company scaring off any other potential large investors?
No, quite the opposite. I mean, we talked to a lot of Korean groups as well, and I think there's obvious competition between the Japanese and Korean economies and between the Japanese and Korean auto industries. And so if one, responds, the other may feel more urgency to have to respond. And we certainly see that in our discussions with players from both of those countries. That's to say nothing of the automotive industries and the related supply chains within North America itself, as well as in Europe. And so all of these nations and all of the auto industries within these nations are fundamentally existentially threatened right now by the rise of the Chinese auto industry. And again, the ways in which I think European, Japanese, Korean, and North American automakers will succeed or fail in transitioning to EVs and in competing with China will ultimately rest on their ability to secure raw materials. And so this feeds into that, what we see clearly in our engagement with these groups across many different countries is an existential urgency to secure critical minerals. And again, I think the market here in North America, a very parochial market that can't see beyond the end of its nose, is just not seeing that yet. I wish every investor could sit in my chair and have the conversations that I have with these global automakers and these global supply chain consumers of nickel do. If you could sit in the chair for even a day, you would see the world as I do, which is to kind of be eternally frustrated in the disconnect between our current valuation and how those strategic players view our project.
I think that simply looking at the PFS can give me an idea of how frustrated you are because of that NPV number right there. I mean, it's hard to shake that off. It's over $2 billion, and you look at the market cap, it's not even 3-digit millions. And so, what do you do about that? Basically, I'm trying to round it up here, but what do you do about that? You go out there. You and I met at a conference, so you go to conferences. But what else do you like? How do you market this, or how do you get the share price up? Is basically what I'm asking.
Yeah, we're both obsessed by the share price from the day-to-day standpoint. As a CEO, I think you have to be, but you also have to be focused on the kind of the long term and driving value to an ultimate exit. So yes, while we're disappointed with the share price, the blessing, I guess, of having a very healthy treasury today is that it doesn't really impact on us now. We don't need to worry about raising money for at least 18 months. And so the short term is just noise. With respect to ultimately changing how the market perceives this project, as I mentioned earlier, we're dealing with an unconventional type of nickel deposit here. It's not a sulfide, it's not a laterite. The nickel is in a mineral called a wheroite, as you mentioned at the outset. This is the first deposit of its type to be discovered in the world. There are occurrences of a wheroite in many countries, but this is the first time someone has found an economic concentration. So what we're doing here is something new, something that is potentially very disruptive to nickel supply going forward, and that's actually quite positive. However, the mining industry and mining investors, for as much as they're involved in a sort of a high risk, high reward endeavor, they can be conservative, meaning, the questions can always come back to, well, who else has done this? What's the template, right? What is the precedent that I can compare company ABC to, so that I can then derive an appropriate value for company ABC? Well, in our case for FPX, no one has ever done exactly what we're doing. So it's not possible to point to that direct precedent. So how can we redress that? Well, there are two things. One is bringing on and getting the validation, including, by deployment of capital from some of the world's largest and most sophisticated players in the nickel business. Get that stamp of approval from Sumitomo, for example, which we have, who are one of the world's largest producers of nickel. Get the stamp of approval from Outokumpu, one of the world's largest consumers of nickel. Okay, so anyone looking at this story should look at and be comfortable to sort of follow the smart money, so to speak, which is the very sophisticated players in the nickel business validating and endorsing this project. On the other hand, we continue to do the fundamental work, the fundamental metallurgical test work, the engineering studies, et cetera, and to some extent keep our heads down and make sure that we're doing that work, as I mentioned earlier, to that tier one company standard. That is what has allowed us to get that investment from those large companies. And at some point, the more we keep talking about it, the more of those strategic investors start to get involved in this project, and as shareholders or otherwise getting into strategic collaboration or other agreements with us. At some point, it will click. There will be a tipping point in this market and how FPX is perceived. We would like to think that tipping point would have arrived already with the arrival of those many strategic counterparties over the course of the last year and a bit. It's all occurred within the context of still difficult markets for nickel, where the price of nickel is down almost 50% over the last year, and for the junior market generally. But at some point, when those conditions better align from a macro standpoint, when people, as we continue to go out and tell the story, we'll reach that tipping point, and we will, I believe, re-rate significantly up that scale vis-a-vis our project NPV.
It's a decent answer, and I appreciate it. I also appreciate you bringing up Aware-White, because I looked at it and I just wondered, what's the catch besides the pronunciation? I don't even know why it's pronounced as Aware-White instead of Aware-Root. I'd probably say something like Aware-Root if I was pronouncing it off the top of my head. I had to look it up, actually. I had to ask someone. But anyways, let's not talk about that. But it's what I'm thinking is, what's the catch? I mean, in everything you describe in your corporate communications, it almost makes it sound too good to be true. So, like, this might be a podcast in and of itself. But what's the catch? What are the risks? What are the downside to having Aware-White as opposed to laterite or sulfide?
The risk is just in that kind of inherent novelty, right? That again, there aren't 10 other Aware-White nickel deposits or mines or operations that we can point to. This is the first. So then you then, for a lot of people, they say, well, you know what? One of the things we like to say is that the mining industry, it's the race to be second, right? It's not the race to be first. And people like to be able to point to those precedents to say, oh, this is you see it now today. Yeah, how many different gold projects are being described as having similarities to the Great Bear discovery that was made in Red Lake a few years ago? So you see that people love to invest by analogy to some precedent and they may themselves not understand the precedent, but the precedent was validated by huge share price appreciation and some M&A activity. The catch with Aware-White is that it's low grade. This is undoubtedly a low grade nickel deposit, and but the benefit here is that the Aware-White itself has these wonderful physical properties. It's highly magnetic. It's very dense, and it reacts well in a flotation environment that allows us to recover a very high value product at much higher recovery levels than is typical for these types of ultramafic low grade deposits. And then it yields a product that, as you mentioned earlier, doesn't need to go through smelting because it's such a clean concentrate. We've been saying these things until we're blue in the face over the last several years in our corporate presentation, our various presentations in person and various meetings and interviews such as these. We'll continue to say it. We'll continue to try to clarify it to the market. why this is a disruptive new source of nickel. There are many sectors of our economy where new and disruptive things are seen as good, right? In the biotech sector, in high tech, being a disruptor is a great thing. In the Silicon Valley, being disruptive and new in mining, for whatever reason, culturally, is not something that is viewed well. We do think there can be a segment of the audience out there, though, that can be excited by genuinely new things, and that those are the people we're trying to speak to as well.
Yeah, tell me about it. I'm a 20-something who made a show called it a CEO Barbecue, and it tries to annoy CEOs on a consistent basis. So no, it's not. Not everybody appreciates disruption or forward thinking here. But yeah, I appreciate your time. I think I'm all out of questions. There's a whole lot more to talk about, so I'd be happy to do this again. But what am I missing? You said you'd like me to be in those conversations. I mean, you wish I could be in the room for some of those conversations. What are some of the actually smart people out there asking you that I'm not asking you?
Yeah, I think the biggest question really for us in the market today, as you alluded to with one of your earlier questions, is the state of our engagement with First Nations. It's complicated. There are many different nations here. They may have differing views on resource or mine development in their territories. One of those nations did come out publicly with a public comment or a public statement opposing our project last year. This is a group that we had previously had over a decade a very positive relationship with. And that is a fundamental overhang, I think, on the share price. And people are asking themselves questions about the status of our engagement with those communities. I can say that we have a very positive and longstanding track record of doing the right things with respect to engagement. However, we recognize that concerns around environmental and cultural protections are very real. They're things that we take very seriously, and really they match with the values of our management team as well. So we're committed to continuing to work with those nations, all of the impacted nations, some of whom are very positive on the project, to advance the project in a way that addresses those environmental and cultural concerns and considerations head on. That is really based on this concept of using this project as an opportunity to work towards enhancements of key cultural sensitivities and heritage sensitivities, to work towards enhancement of key habitats for things like salmon and caribou and other very important species in the region. So over the course of this year, we expect that we'll have positive news that we can provide to the market with respect to our engagement efforts that really lays the groundwork to fundamental project advancement in a real collaborative way with those local communities. It rests at the heart of, as I said, how we've always operated, how we always will operate. However, we'd like to be in a position to show positive developments to the market on those questions this year. And I think as we see that will remove or at least diminish a risk that people have ascribed to the project to date.
Okay. When in the year do you expect to have that by?
No specific timing, really. Those are bilateral, or in some cases, multilateral discussions that we're having with a variety of groups. And so, and it could be that there's, a piecemeal aspect to how we're able to report on our engagement activities over the course of this year.
Right. Okay. Well, that's a very good point and a very good question. Thank you for asking it and answering it. And that's it. I'll put up your contact information on the screen for people listening and watching so they can reach out if they have any questions. And I really appreciate your time.
Thanks, Antonio. It's great.
All right, moving up the market cap. Next up is Lumina Gold Corp, a gold development company developing what they call the largest primary gold asset in Ecuador. The company is listed on the TSX Ventures Exchange under the ticker symbol LUM, where an average of about 55,000 shares trade each day, with a 52-week high of about 71 cents and a 52-week low of about 33 cents. With a market cap of 154 million Canadian dollars and about 415 million shares outstanding today, this is a 37-cent stock. Counting up options and warrants on top of that, that would get us to about 452 million shares outstanding, by the way. Almost 28% of those shares, though, are unsurprisingly in the hands of the former, what am I saying former? I want to say founder of the Lumina group of companies, who is no one less but Mr. Ross Beatty, of course. And then another 16.5% are in the hands of the Ecuadorian entrepreneurial group. There's 8.2% that's held by management and directors. and 6.1% is held by Route One, which is it's a fund. It's basically it's an investment fund. That's based in California. It's basically what it is. That leaves us with about 40% or so in the hands of other institutional and retail investors. Looking at the last financial statement, which is dated September 30, and that's expressed in US dollars, by the way, the company had about $7 million in cash, which sat on the balance sheet against current liabilities, again, at the time, of about $23.5 million, mostly in the form of a loan to Mr. Beatty himself, which sat at $11.5 million on the balance sheet. And the majority of the rest is related to a gold stream agreement with Wheaton Precious Metals, and that I'll touch upon here in a second as well. Interestingly, no long-term debt involved with the company at the time of recording. As it always is, though, you want to go to setterplus.ca yourself to see the most up-to-date financial data, because after this statement was published, a bunch of things have happened. Again, this was September 30th, so quite a while ago, among which Ross Beatty has converted the outstanding debt into common shares at a price of 42 cents per share, which made him, again, the largest shareholder, as I pointed out earlier. On top of that, this is an active development company that's trying to grow its asset too. And to give you an example, they spent over $8 million on exploration during the first 9 months of the last fiscal year. And they also spent $2 million on G&A and salaries, which, by the way, means that their burn rate is give or take 200 grand a month. And that's, of course, excluding the interest payment for the debts that I mentioned. But numbers aside, in an effort not to make everyone fall asleep, I'll move on to talk about the assets, or better said, the asset, singular. Lumina's flagship and only project is called the Cangrejos, which to me sounded like a delicious dish, but apparently it's a Spanish word for crabs, which indeed could be a delicious dish. Not if I cook it, but it could be. Anyways, Cangrejos is located in southern Ecuador, close to the Peruvian border, and also a few dozen clicks away from the port of Puerto Bolivar. This is a 100% owned land package that is made up of 6,374 acres of land at an elevation of, to my estimation, some 2,000 or so vertical meters. What lies beneath a portion of this land package here is a gold copper porphyry with a recently updated resource estimate dated April 2023, showing nearly 17 million ounces of gold in the indicated category. I am seeing 3.7 million ounces in the inferred category and 11.6 million ounces in the probable category of the National Instrument 43-101, that is. That's also supplemented by copper, by the way, respectively, in those same categories, being 2.2 billion pounds, 500 million pounds, and 1.4 billion pounds, making it, apparently, the 26th largest primary gold asset in the world. The 2023 PFS proposed 371,000 ounces of production per year with an added 41 million pounds of copper, resulting in, during some years, over 500,000 ounces of gold equivalent. Those equivalent numbers are purely illustrational, as they always are, of course, and they have plenty of caveats to them, but production is expected to be again, primarily gold, so nearly 80% of gold, 20% of copper, and some silver in there too, but basically insignificant, about 1%. It's a large project, as mentioned, so we're talking long LOM, 26 years to be specific, and the all-in sustaining cost is expected at $671 per ounce of gold. If the PFS was done at spot gold prices at the time of recording today, which is over $2,000 an ounce, that would result in an NPV5 of almost $4 billion and an IRR of probably around 30%. Building mines is, of course, not easy, and it's most definitely not cheap. And for Lumina, the initial capex is estimated at close to $1 billion right now. With the resource being that big, you wouldn't expect it to be high grade, and if you aren't expecting it, then you're right, because it isn't. It's stepping in at about half a gram of gold per ton and 0.1% of copper, but it does have a low strip ratio. So we're looking at an LOM strip ratio of 1.26. Grades are expected to be higher, though, during the ramp-up years, with up to 0.7 grams per ton of gold. And then recovery rates of those grades are probably on your screen right now. And I'm talking about total recoveries, but we are looking at 85% recoveries for gold, 79% for copper, and 55% for silver, mostly in the form of a gold-copper concentrate, and also a small percentage of doré bars. The way the mine is proposed right now, operations will start with a 30,000 tons per day processing capacity for the first 3 years, and will then expand to double that capacity to 60,000 in year 4. And then another 33% is expected to be added by year 7. So it's basically 80,000 TBD processing capacity starting in year 7 throughout year 25. That, of course, is not going to be cheap. It's going to require more capital, and the expansion capital is estimated at $454 million, with the addition of sustaining capex estimated at close to $600 million. If and when the project is built, though, it's also going to be subject to a 3% Ecuadorian NSR royalty and a newly lowered Ecuadorian corporate tax of 20%. I probably have the processing and production schedules up on the screen right now as well, so please pause the video, read up on them. They do matter. And when you move on, I will also probably have the project details up on the screen right now, which is going to show you that the project has expansion potential according to Lumina, and recent drilling is confirming that potential basically in some of their most recent news releases. So 2024 will be focused around potentially growing the deposit a bit more, while also working toward a feasibility study and getting construction permitting, or at least getting close to it. On top of all of that, basically on top of all the other bells and whistles that it takes to build a mine. And that entire process, by the way, is expected to take between 2 to 2.5 years from today. There's an interesting deal with Wheaton Precious Metals, as I alluded earlier, that finances about a quarter of the initial capex, but I feel like I've been talking too much. So now might be a good time for me to start thinking about shutting up. And Marshall, give it over to you, because it just hasn't been an easy year for, as we were talking sort of off mic, it hasn't been an easy year for most companies out there. Most of you have seen your share prices go from upper left to lower right on the chart, and the share counts have gone, for a lot of them, have gone the opposite way, right? From lower left to upper right. Which of course begs the question for you as well, talking about these capex numbers here that might, be of concern to some people. What's the way forward? What does that look like for you, and how do you finance this thing going forward? Or is the hope to find a buyer for Cangrejos before you even have to find a financier for it?
Yeah, so right now we just announced yesterday the engineering team for the feasibility study. So we've completed all the field work related to the resource estimate. We infilled the first 3 years of the mine plan, which is the first expansion phase, to 50-meter centers. So we've done that. We're in the process of updating the resource estimate. We completed a detailed geotechnical drilling program for pit slope design, recommendations to feed into the mine plan, which we'll be starting that as soon as the resource is complete. In addition to that, we drilled a bunch of metallurgical test holes. So we've done all the field work. Now we're embarking on the basically the engineering phase of the project, right? So you just had quite a few things there. Let me try to unpack them. I think from an investor perspective, if you go back to 2017, when we put out our first resource of Cangrejos, it was about 4 million ounces of gold and copper as well, about the same ratio, 80% revenue, 20% copper, 80% gold. We've grown the resource 4 times over that period of time. Gold has gone up some 60% over that period of time. Copper's moved up as well. And our share price today, actually, I looked a minute ago, we're at 40 cents a share. So that's down probably 25, 30% in that ballpark, maybe a bit more from that 2017 mark. So basically, you also mentioned that Ross converted his $15 million loan at 42 cents. So basically, as far as an investment thesis right now, you're coming in at where basically Ross and a lot of the other financings have been. Several have been up in the 60-cent range, 50, 60-cent range. So it's a good time to look at the company. As far as where we're going forward, we're in the process not only of doing the feasibility study, we're also negotiating an investment protection agreement with the government that will allow for no duty on capital items for construction of the project, major capital items. It fixes that tax rate at 20%. You get repatriation of capital. There's 5% repatriation tax right now. You would get that at 0. So it does a lot of good things. And then also we're initiating an EIS on the project. So basically our plan is to have by sort of the late second quarter, roughly, of next year, have the feasibility study complete, have the permitting pretty far down the line as far as the ESIA goes and have that investment protection agreement. Now, we just merged a sister company, Luminex, with Adventus, and Adventus has kind of moved through the permitting process here. They finally got their ESIA approved. They had their public hearings. They're just getting the few last sort of permits in place, and they'll go ahead and start production in the first half of next year. So we're kind of moving right behind them. We're probably a good 18 months behind that schedule right now, as what Adventus has accomplished. So that's where we're headed. Now back to the question of what do we need to do to build this and what the strategy of the company is. So I've been involved in the Lumina group with Ross BD for 20 years now, kind of the senior guy after Ross in the group, been involved in all Lumina copper companies. I'm on the board of Equinox Gold, a founding board member with Ross on that. You know, we're building the Greenstone mine, 1.2 billion. So, 1.2 billion. We have the capability within the Lumina group to take this thing forward and build it. But our history has been, we've taken on these large projects. Through exploration, we've added value. Through engineering, we've de-risked them. And then they've moved on to a major company or mid-tier that's actually going to put them into production. Good example of that was the Caserones mine that Lundin just acquired. That was one of our projects. So that's kind of the strategy. And we'll continue to advance this thing. And if we have to construct it, we'll look at it. We'll make a decision at the time. If we're taken off along the way, that'll happen too. So we're prepared for both scenarios.
I think that one of the best ways to sort of learn about the company along the way is by going down two paths. And one of those will be, let's talk about what if you had to build it yourself. And the other one will be, let's talk about if you had to sell it. And let's start by leaning into that takeover potential there for a minute, because I'm trying to imagine who this asset fits with, like whose portfolio does it fit with. It's 80% gold, so maybe not Barrick. Mark's been out there saying, oh, I want to go more into copper, but it does have some copper in there. Definitely not negligible. Maybe too small for Newmont at the time being. So, you know, we take it down the trail basically from those two, Barrick, Newmont, and where would that lead us? Like, who do you see this asset fitting with?
Yeah, so it's kind of interesting. This thing was discovered by Newmont back in, I guess it was in the 90s, 1990s, then late 90s, when gold went down to sort of 250. They moved out of the country and shut down a lot of their exploration worldwide. Newmont is in the country. You've got Barrick in the country now. Barrick just announced a deal with the state mining company for early stage exploration properties. But if you look at the way we had the PFS phase, the 30, 60, 80,000 ton per day expansion, you get to 80 at year 7, mid-tiers could take that on. So again, you know, not saying this is an Equinox of interest, but an Equinox type company. We're building Greenstone, it's 1.2 billion. So you have some mid-tiers that could play in that range. You also have, you know, Chinese companies that can play in that range. You've got some funds that may look at it. You know, you've got groups like Appian and a lot of these guys that are Orion that would kind of look at that, maybe come in an investment, take it over, look for a partner. So that's kind of the universe of potential acquirers that I would see.
Right. Well, basically the mid tiers, right? As you said, the well, is it of interest to Equinox? You're on the board, so you can maybe speak about that.
Yeah, I mean, it's not something that Equinox has enough on their plate right now with getting Greenstone up and commissioning and that. So it's not something that we're looking at.
Right. What is there someone else then maybe, like, as you mentioned the Chinese, is there anyone scooping around Ecuador right now, or like are you seeing branded vehicles that you can recognize anywhere in sort of the southern Ecuador right now?
Well, so okay, so you've got, you know, Newmont acquired Newcrest and they've got their position there. You've got Jiangxi has taken some positions in you know, small positions in the country. You've got Dundee is out there, they've taken things. So you know, I don't know who it would be necessarily and exactly how it would fit the individual's portfolio. But I think what the market and what the corporates are looking at is for us to further de-risk it. You know, Ecuador's has had its up and downs, but you've got two major mines built that are contributing a substantial amount of revenues, GDP revenues to the country. So they become more critical. At Venice and the El Domo project, once that's under construction, that'll be the third modern mine to be built in a while. And then you've got La Plata, and then you have Loma Larga behind it, and then there's us at Cangrejo. So as Ecuador has had noise recently politically, it's become a steady and better mining jurisdiction for investment, people that are in country advancing. And the new president, President Noboa, has come out in favor of, they need the economic growth, and mining's been one of the biggest contributors in recent years. It just passed bananas in March of this year as the #3 export. So it becomes more critical, right?
Sure is. That's something maybe we can go down that path to sort of the other potential path, which is you building this yourself. As you said, Ecuador can maybe no longer be called a banana republic because mining is surpassing it right now, as you mentioned. But politics in LATAM can be volatile. I mean, it's good now and it could be bad next month. Again, Ecuador recently had a big election too, some turbulence around that, some turbulence before that too. So what do you think the permitting process specifically of a full-blown mine looks like in Ecuador in sort of the mid to late 2020s? And is that something your group is ready to go through with, specifically the permitting process?
Yeah, and we're initiating that with the ESIA, that we're in the process of bringing a consultant on board that's approved by the government to run the ESIA, and we'll have that consultant on board in the next month or two. So yes, you can permit it. I think the Venice case shows you that you can in recent and current market, although they took a while because of basically what was going on politically in the country with the last administration. But you can get these things permitted. Lundin got permitted. They announced an expansion. It got permitted. Mirador has announced an expansion from 60,000 tons per day to 140,000 tons per day. They're in the process of permitting it. It's a $625 million initial capital investment for that expansion. So I think the pathway is there. It works. The government is pro this foreign investment. They need it. It's a dollarized economy. So I think the path's there, and we're moving along it. So we believe sort of concurrently by sort of the second quarter of 2025, we hope to have the ESIA approved. We hope to have the pre-feasibility or the feasibility study complete and the investment protection agreement in place. And those are the three primary major things you need to do to get your operating license. There's secondary permits and things like that. There's water permits, there's tailings permits. But those first three things are the primary deals you have to do to get the thing in operation. So the second part of your question, this is where the Wheaton deal comes in. So basically it gave us $48 million to advance the feasibility study and some early works. And Wheaton gets 6.6% of the gold production, up to 700,000 ounces of gold. Once we hit that, they would go down to 4.4. If there was an acquirer, they could buy down that stream to 4.4, more or less based on the value of the investment plus a profit to Wheaton. But that gives us $252 million in a pro rata basis for building the mine. And that's important because about a quarter of the financing to date, if we come in around the $1 billion initial capital number, is already there. So then you would have to go to the equity market or equity and debt market, and you'd probably have raised maybe $500 million in debt, and then the balance would have to come from equity partnerships, that kind of thing.
Are those actual numbers that you're thinking about, or is that just a sort of an arm waving example?
No, it's not arm waving. It's based on the PFS and kind of the work that we're doing now. Obviously, one good thing about the PFS, the capital cost, operating cost was Q4 2022. So we caught most of the inflation. We're starting to see inflation roll over. So basically, say it's plus or minus 10 or 15%, whatever number you want to pick, there's a good portion of that initial financing to construct the project in place.
Right. Okay. I'm also assuming in terms of permits, what you told me includes sort of the local population, which there isn't all that many people around the project, if I'm not mistaken.
Correct. So we're in El Oro province and, the gold province. There's been a history of gold mining in the area for quite a long time, smaller scale. There's permitted legal mining. There's some illegal mining in the area. The government's come out and really wants to crack down on the illegal mining. But so mining is known in that region. There's no indigenous communities in the area, so that sort of helps in the permitting process. You only have to do the environmental consultation of the ESIA and not the ILO 169 consultation, the consulta previa. So that kind of helps it. There's really good infrastructure in the area. We're close to the Port of Bolivar, where right now Mirador ships their concentrates about 350 kilometers across the country to export. We're about in a straight line, about 40 kilometers away. The port already is taking gold, copper concentrates or copper with a little bit of gold concentrates from Mirador. So all that stuff bodes well. People know mining, and obviously the scale of the project. We'll have to continue to communicate, our plans, what the project means. The local communities, the closest one's about 8 kilometers away. During the drilling program that we just completed, we did 19,000 meters between the resource, the geotech, the metallurgy. We use all man portable drill rigs, and we build trails and we build platforms, and we use community labor. So we had over 125 community members just to assist this drilling program almost over sort of 9 months. We couldn't recruit enough of those community members from the nearest communities. We had to go outside the area of influence to get people to be able to do this. So we've had a lot of local community in and out of the project. We have hires that are permanent in our camp as well and within the company. So we've got a good social license and we'll continue to build that as we advance the project.
Where I'm coming from with this is why I mentioned that there's maybe not that many people around you is because I'm thinking about labor. So maybe you can talk to me about that, and I realize it's forward looking, but talk to me about how many people you might need to run sort of that 500,000 equivalent ounces per year, and where are all those people going to come from? Like, do you expect it to be largely a local population type of thing, or like, what do you expect?
Well, there's a couple of components to that. So outside of the immediate area influence in the project, you have Santa Rosa and then you have Machala. Santa Rosa has about 80,000 people, I believe, and Machala about 250,000. And it's a fairly it's industrialized in the context of agricultural type industrial work. There's a lot of operators in the area. There's a lot of infrastructure projects the government's done. So you got, cat operators, truck drivers, a lot of those sort of things. And what we would have to do, obviously, is do a lot of training. But there is labor in the area. And as far as construction, you're probably 1,500 to 2,000 people during the initial construction period, and then probably about 900 after that for operations.
So, I mean, you still expect it to be mostly Ecuadorians from those two cities?
Yeah, and the regions around, general laborers, around the communities nearby. So and again, I mentioned there is mining that happens in El Oro province. So in the Ponce Enrique area, there's mining that goes on. So there is skilled operators at a small scale. Obviously, you'd have to train them for a bigger scale project like this.
Right. Okay. Well, how about how's some of the crime data in that region, by the way? Because I mean, it's close to a border, which is often a strategic crime spot, if I'm to believe Netflix. But it's also between Colombia and Peru, which again, if I'm to believe Netflix, is also strategic for criminal organizations. So, how's a high level, but also how's low level crime in that region?
So in the area, the projects and the communities that we're working around, we haven't had any issues. But obviously, Ecuador's been in the news recently with some of the issues with the cartels. You've got the Sinaloa cartel up in Mexico working within Ecuador. You've got Colombian cartels. You've got smaller Peruvian cartels. And Ecuador is a transshipment spot for primarily cocaine coming out of Colombia and Peru. And so you've had, gangs fighting for territory, the military and the Noboa government, with the riot, with the violence that's happened related to that recent months, has come in and cracked down on it. They've arrested about 1,500 people. So they're trying to really take care of this issue right now. But as far as us operating and our ability to operate through all this, we haven't had any issues, and we see things getting better here. You can't clean up an issue like this overnight, but right now, Daniel Noboa, President Noboa, has about a 90% approval rating for the measures he's taken to try to put down this organized crime, cartel, drug-related business.
Right. Well, I also don't expect you to have any issues right now as an exploration/development company. What I'm thinking about is, getting to that point where you have 1,000 people working for you, and what that's gonna do to the space basically around the mine, because it's highly beneficial for the economics of the region, but then at the same time, it also just attracts attention. So
Sure.
I don't necessarily have a question, but that's probably something you're already thinking around.
Yeah, I mean, it's listen, we went into the country in 2014, and I've worked through Latin America the last 30 years, and I've been in the industry 45 years. But I worked in Colombia, I've worked in Peru, I've been in and out in Mexico quite a bit, in and out of these areas where these issues are. And in the long run, you can operate, you can take the precautions you need to safety wise, and it's just a way of life, right?
Right. You have a good amount of hair for being in this industry for 45 years. I don't imagine I'll have that. But we
It's all
talked.
natural too.
What's that?
It's all natural.
Well, working with Ross Beatty probably helps too, though, to be fair. But
Yeah.
we sort of done the two what if scenarios here.
Yeah.
Let's do a real life scenario too. Like what exactly is happening in 2024 at Congrejos? I said some stuff, moving forward towards these feasibility studies, doing a lot of paperwork and stuff like that.
Yeah.
Anything worth signing in terms of drilling, metallurgy? What else?
So as far as further exploration, like there's several targets that would add size to this deposit. There's the Valaraíso target. There's Pan Azúcar target to the north. We've got porphyry systems that have gold. We've done work on it. But, in this market, by doing this sort of earlier stage step out type exploration with the drill bit, it really doesn't do anything to a project of this scale. So our focus really has been to do the work we need to do to support the feasibility study. So we completed a 8,000 meter resource infill program. We completed the 3,000 meter metallurgical drill program, and then there was about a 3,500 meter geotech drill program. So that underpins, like I mentioned earlier, the resource and the mine plan and that work. We also have to do facility siting work. We have to go in and at a feasibility study level, do all the work, geotech work, and that sort of thing we need for the plant sites, infrastructure, tails. We've gone with dry stack tailings as the approach in the PFS, which will likely be the same in the feasibility study. That allows us to recycle about 85% of the water back to the plant. So we've done a lot of project design measures from an environmental perspective, and it is a fairly high rainfall area up at the mine where we're looking at putting the tailings. It's a lower rainfall area, so maybe 2 meters at the mine, a meter sort of rainfall in the area of the tailings. But that's kind of the approach we're doing. The project's fortunate. There's no acid rock drainage in either the rocks or the tails. A lot of the work we've done today show that. So we're also doing a lot of habitat restoration and reforestation in lands that we control that were previously logged and grazing and that sort of thing. So we're trying to put together a really sound environmental and social project along with the engineering design. So what you're going to see going forward this year is we just put out a news release last week that had some of the drill results that we encountered in the infill drilling program. You'll see metallurgical test results. Hopefully you'll see announcements about reaching an agreement on an investment protection agreement with the government. And then hopefully you'll see early next year sometime movement on both feasibility study and the permits, the ESIA. So we're kind of in that, if you look at the Lassonde curve, we're kind of in the very bottom of that. And it doesn't do well for news flow necessarily, but we are advancing the project and we're going full bore. One other thing to mention is we hired a COO, Ron Hallis, who has got about 35 years experience operating major mines around the world. So, he's going to help us sort of from an operator's perspective, develop the feasibility study for optimum operations in his view. And that's going to be useful as well.
Gee, I hear that from other companies too, by the way, that they're putting sort of drilling on pause right now, even though, especially companies in that part of the Lassonde curve, as you mentioned, putting drilling on pause because there's really no market reaction to any new discoveries because you're not getting any value for the one you have, and you're definitely not going to get any value for anything else. Sure, I can live with that, and I can agree with that. What happens if the price does move? Like, are you ready? Do you have drill targets? Can you organize a drill program within like 2 months to go there and drill it?
100%. And the other aspect too is there's two deposits at the Cangrejos project. There's the Cangrejos proper deposit, and then there's the Gran Bestia deposit. Gran Bestia is basically really low stripping ratio. It's about 0.5 to 1. It comes in later in the mine life. It's a bit lower grade than Cangrejos, but basically you're taking off the top of a hill, and it's open to the northwest in the north, also at depth. Cangrejos is open at depth and to the southwest. So there's near-term, near-pit drilling that you could do. And then to the north of there, the Gran Bestia pit, probably about 3-4 kilometers, you've got the Pau Sucre and you've got the Valaraíso deposits. And we've done enough surface work. Neither one have been drilled, but really good surface anomalies and a porphyry and breccia system there that's similar to Gran Bestia. So you could drill that. We've got drill targets already. So if there was a major move up and it made sense, we could get out there pretty quick.
What's that pretty quickly? Like how far in terms of organizing permits, the drilling?
We already have permits within the area there, so we would probably have to amend basically a notice that says we're going to drill in that area. But yeah, you could do it in a few months.
Okay, good. Well, to be able to answer that question sort of off the cuff like that tells me that you've probably sort of ran a risk reward or cost benefit analysis to doing more drilling. Can you talk to me about sort of those internal estimations in any sensible way, as in how big can it really get, or how much bigger than this can it get?
Yeah, on the corporate deck, it's kind of interesting. You've got a long section through both Cangrejos and Gran Bestia. So we did the resource estimate in the PFS. I believe it was at 1,650 gold, but we did the mine plan with a pit limiting shell at $1,100 gold. And that was just to tighten the thing up and get the best NPV out of it. But at a higher gold price, like today's gold price, or even to take the pit limiting shell to 1,250, you bring it, the pit goes deeper and you bring in quite a bit more gold. And you can see that in that long section because every hole that bottomed in that long section was still in mineralization, right? So there's that expansion potential.
Okay, so I mean, is there a number that you can tell me in terms of gut feeling, or is that going to get you in trouble?
It's going to get me in trouble.
Okay. Good. Fair enough. Fair enough. Are you planning, do you think G&A is going to drop this year because it's going to be sort of less work going on, or are you still budgeting around that 200K?
Yeah, that G&A is probably fairly fixed. Yeah.
Hmm. Okay, good, good. Okay, I'm also not hearing much about the sort of the other side of the M&A world, as you being the perpetrator of it, if you will. So basically buying or a company or an asset or something like that. One of your dare I say, sister companies recently went through a transaction of this sort, sort of a merger.
Yeah.
Um, is that something on the table, or is that of interest? We talk about the political risk in Ecuador. Is that a way to diversify away from that? Could you get value for it? Talk to me about that.
Yeah, I think the preference would be, rather than to go that route, is to de-risk the project enough and then have somebody take us out, right?
Mm,
But if you were to look at merging or doing that, you would you'd have the option of whether you double down on Ecuador. In the case of Luminex, which was an earlier stage company than Lumina Gold and Adventus, we doubled down on Ecuador. If you were to take an asset like this, you'd want accretive value in some way for shareholders, whether you're taken out or it's a merger of equals or whatever it is. You would probably go into another jurisdiction just to get some geopolitical spread.
mm. Okay. Well, what is that?
But 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 that's not on the table right now. I mean,
Mm,
that's not where we're working. The one thing will say after being in this business as long as I have and working with Ross for roughly 20 years this year actually. We don't fall in love with these projects. We're open-minded to what makes best sense for shareholders. So we
mm.
would look at any of those type of options if they made sense.
Right, right. What is, well, I'd love to ask Ross this question myself, but what is sort of his sentiment towards this? He converted a bunch of shares at 40 cents.
Yeah.
So he's pretty much, as he said, at break even. Before the interview, before the market opened, I looked at it, it was 37 cents per year, up almost 10%. So
Yeah.
it's over 40 cents now. But so he's basically break even. What is his sentiment towards this? Like, is he as the youngsters call it these days, diamond hands and sort of holding on to it, or is he looking to get rid of it as quickly as possible?
Well, I mean, it's back to, as I mentioned, the Lumina Group's history. If you go into the deck and the appendices, there's a slide that shows the group history, right? So we've moved several companies on, but we also had a company, Anfield Gold, where we had a Coringa project in Brazil. And we did a three-way merger of that along with Trek Mining and Newcastle Mining, and that formed Equinox Gold, right? So, Ross is looking at all sort of ways. He's come out and said that, he views that we can add value and de-risk this and likely will be taken out.
Hmm. And also, as far as I understand it, I mean, is there necessarily a reason for him to move on from this as I see it? Not per se, because as far as I understand it, from what you've told me here today, you've got over $7 million in cash. You have the Wheaton money there ready to be drawn on, basically. It doesn't
Mhm.
sound like you need to do a capital raise anytime soon. Is that right?
No, no, we don't. And in May of this year, we'll get another $15 million tranche from Wheaton.
Hmm.
So we're in good shape as far as we don't need to come back to the equity market. The only thing that we may have to look at is possibly coming back for land purchases or early works, sort of work that's outside of the $252 million money for construction.
And that's something you might potentially raise some capital for.
Yeah, I mean, right now we have no need for it, but as the project advances, we'll have to see how it goes.
Right. Okay. And then obviously market dependent then moving forward. If it's a good market, you find it reasonable to go and drill. That's also probably where you
That would
might start coming into the market. Yeah. Okay.
exactly. Yeah.
Okay. Well, let's then lastly maybe talk about how you tell this story to the market in this market and while you're also not drilling. That's probably one of the more challenging things parts really of your job? Like, first of all, how do you market in the boring part of the Lassonde curve? And how do you market, or basically, how do you raise the price of the stock in this environment while not drilling?
Yeah, well, it's doing what you're saying you're going to do, and then putting the results out as you go. And there's a big value disconnect between any metric that you want to value this project on. Say you use the PFS and you take the 2.2 billion NPV at 1650 gold. You subtract the Wheaton stream from that. That takes you down to about 2 billion NPV at 1650 gold. And you apply a PNAV ratio, and any way you do it, 0.2, 0.3, 0.4, 0.5 PNAV ratio, the valuation on this thing where we're trading in the market is way low. So there's significant upside, right? So say you take the 0.3 PNAV ratio for a developer that's advancing, that's 600 million Canadian, right? And so we're trading at, I guess we're at 250 at 40 cents. We're probably at about $2 or 250 million Canadian NPV. And the PNAV ratios I was talking about, you're 500 million US, right? So there's a big value disconnect. And we think that as we continue to move the project forward, there'll be a re-rate.
Be that as it may, if a tree falls in the wood and there's nobody to hear it, doesn't make a sound, right? So what I'm asking
Sure.
about how do you market it is more specifically, what do you do? Like, are you focusing more in Europe, or are you going to New York, targeting high finance and stuff like that?
So we have a broad investor base. We have a real strong following in Europe, in the Middle East, in the US and Canada, and we're out there actively. Scott Hicks, our VP of corporate development, myself, we're in Europe a couple times a year. We're doing conferences all the time. We're pretty active in our marketing efforts. And a lot of companies will go out and they'll do that when they need to raise money. We're doing that just to keep investors and the interested market participants up to speed on what we're doing, right? We've never gone out and done road shows to raise money. We've always raised money and then updated people on what we're doing.
Yeah. It's exactly those news releases that always get me going when I see, some companies saying we're going to participate in the next 5 conferences, which often to me means, oh, we're going to be raising capital, so beware. So, yeah, Marshall, this has been a good conversation. As you're going around and you're talking to investors, what are smart people out there asking you that I'm not asking you?
Well, I mean, obviously, you can't miss the geopolitical risk situation in Ecuador. So we get that a lot. You've already asked that. One of the things that really people miss, they'll focus on grade. And we have a slide in the deck that shows the grade of milling peers that are gold producers versus stripping ratios. So if you look at that slide, we're at the bottom as far as life of mine average grade. But if you divide that by the stripping ratio, we move up towards the top. And what a lot of investors miss is that they focus on grade, but they don't really look at the strip ratio issue, and that drives mining costs. Obviously, you've got milling and G&A and other costs on top of that. But that really is an asset for the project, that very low strip ratio. So every ton of ore you get to, you only move 1.26 tons of waste life of mine. In the early years at Gran Bestia, it's even lower than that, quite a bit lower. So that's one thing that gets missed. That's critical. So that's one thing I would point out, and that table that we have in the deck is real illustrative of that.
Right. Okay. Anything else that I'm forgetting in terms of, again, some of the smart questions that wouldn't come up with me, metallurgy, something else, something geological that you think is worth talking about?
No, I think you've covered most of it. I mean, the real hits that we get is low grade Ecuador. We're in the lower end of the we're in the lower end of the Lassonde curve, so not a lot of news flow. So we've talked about all that.
Yeah. Yeah, it's true. Well, great, Marshall. Thank you so much for investing your time with me. It was a pleasure. I hope I can follow along as you're developing and we can do this again soon.
Great, Antonio. Thanks for your time and your listeners' time.
All right, next up is Peninsula Energy, an aspiring uranium producer with assets in the US. Companies listed on the Australian Stock Exchange for a change under the ticker symbol PEN, where an average of about 12.5 million shares trade each day with a 52-week high of 20 cents and a 52-week low of about 8 cents. After what was a difficult year for the company last year, Peninsula is now sitting on a market cap of around 210 million Australian dollars, which is about 140 million US dollars or 190 million Canadian dollars. And with about 1.9 billion shares outstanding, again, this is an Aussie stock, so that's why today this is an 11 cents stock. As of the last financial statement, which is dated September 30th, the company had about $12.5 million in cash and cash equivalents. They had no debt, but they did also have 210,000 pounds in above ground inventory of yellow cake or U3O8 or uranium or spicy rocks or something, which at today's spot price is worth a neat $21 million. As it always is, though, you want to go to Peninsula's website to see the most up-to-date financial data because after the statement was published, that they closed a financing basically to the tune of about 6.5 million US dollars, or 10 million Aussie dollars, that is. So the financial situation will look different by the time you're watching this. The company is, of course, actively developing its uranium projects, which we'll talk about in a couple of seconds here. And so there's costs related to that. And for doing that at the end of Q3 last year, they had spent, and this is for, well, 3 quarters, they had spent about $7.5 million, whereas the G&A and the staff costs stood at about $1.5 million for the quarter, or rounded up, that's about $500,000 a month. That was for the quarter. So not the 3 quarters. So boring stuff and numbers to the side. Most of you will know Peninsula as the owner of one of the largest uranium deposits in the US. They hold the Lance project, which has a JORC resource on it for almost 54 million pounds of U3O8. More importantly, though, this is not a traditional mining project. It's a proposed ISR operation that includes pumping acid basically into the ground, recovering the uranium without really making too much of a mess or digging a big hole in the ground, and of course, therefore, doing it more cheaply than traditional mining methods. Employing the ISR method, though, here at the Lance project, and specifically on the Ross production area, is expected to yield up to 2 million pounds of U3O8 per year. And the company says they can produce those pounds at an all-in sustaining cost of about $50 and some change per pound of uranium. But I also like to just generally caution you that inflation has not been kind to anybody. It's still there. This is a recent number, though, from Peninsula. But also all-in sustaining costs don't always include actually all of the costs. Just keep that in mind while you're doing your own calculations and do dig deeper. Now, to achieve production, Peninsula will need a couple of variables, among which time and money. And although some say that time is money, I've spent nearly 5 years in uranium and still managed to lose some money. But that's a bad time story for another time. For Peninsula, though, the time component says that it'll take them about another year or 10 to 11 months from today, if you're feeling kind, and it will cost them another $53.5 million to begin production. So by the end of December this year, basically, is when they expect that to happen. That capex will be increased by another $17.5 million that will be spent on ramping up or expansion capex, basically between first production and positive cash flow generation. So I think of it that way. It's going to be about $70 million, $71 million is budgeted between now and achieving positive cash flow, which is expected to occur within 12 months of production. So more specifically, positive cash flow is expected by the end of 2025, and they need to spend another $17 million before that happens. And as of the last mine plan, production here can go on for 10 years, basically, with an average annual sales expected at 1.5-ish, so 1.5 million pounds per year over that LOM, which results in annual revenues of almost $1 billion over the life of mine. And that is under the assumption that $67 per pound of yellow cake sold is achievable over that 10-year period. Now, why positive cash flow matters is because, well, first of all, because money is nice, but also because this production will come from really a small portion of the overall land package that Peninsula is sitting on in Wyoming, which, by the way, spans 37 by 8 kilometers. The land package, not Wyoming. But all of that is suggesting that there is room for resource growth and so also LOM growth, basically, through exploration, with the idea being to test the what they call the Barber resource area with the cash flow that the Ross production area is expected to generate. So that's why cash flow matters here. It's a bit of arm waving here, maybe, but the company believes that drilling more here would result in over 160 million pounds of U3O8 being added to the resource. Again, potentially, eventually, maybe. Those are your forward-looking statements. And that could then more than quadruple the total resource, basically bringing it over 200 million pounds. Something else that Peninsula hopes to grow the resource with is a newly acquired dagger, which is, to the shock of everybody listening, not an actual knife, but it is the name of a project also located in Wyoming. It's about 20 kilometers, not 12, about 20 kilometers northeast of the Lance project. So basically a walk in the park for people from Wyoming. And on that project, though believed to be underexplored, Peninsula has an inferred resource of almost 7 million pounds of U3O8, but at a much higher grade than Lance. So yes, it's early days. Yes, it will take drilling to bring those pounds over to a feasibility scenario and whatnot. But again, Wayne tells me that he's hopeful, which is why they're planning a drill program for 2024, which again, after a tough corporate years or corporate issues, challenges in 2023 should be interesting. So I hope to hear more about that in here. But for that to happen, I will once more have to shut up already and give you the word here, Wayne, because I do want to know about what's really happening here and what's really changed since we last spoke, because you have a lot of balls in the air right now. You're doing a lot of stuff yourself that you had expected a third party would do. You went through what I can only describe again a stressful corporate wise year. So talk to me about anything and everything here. What's the focus right now, and what are you doing basically?
Well, first of all, Antonio, that was an excellent recap. Thank you for doing your homework and sharing that with your audience. Look, Peninsula, I think the best way to appreciate Peninsula is to take a look back into the past. In 2015, Peninsula was a company that took the project, the Lance projects, from conception to production. An exceptionally talented entrepreneurial and technical team that did that. The company developed the resource from probably 8 million pounds to 54 million pounds over the course of the years from drilling really programs in 2011 to 2015, and over the course of that time they recognized what a tremendous asset the Lance projects are. Really one of the largest contiguous U.S. uranium development projects. So they decided it was time to put the project into production. They licensed it as an alkaline in situ recovery project, and they put the project into production at the tail end of 2015. People who are familiar with uranium know that the end of 2015 wasn't exactly a great time for uranium. It was 4 years post Fukushima. Prices were languishing, and but what Peninsula had behind it was sales agreements with utilities and a strong motivation to produce to meet those sales agreements. So they built a capital efficient rather than a capital intensive project. They built what in the in situ industry we call a satellite facility. We were capable of taking uranium out of solutions and loading it onto ion exchange resins. And they signed a toll milling agreement with a third party, which was an industry peer whose facilities were otherwise idle. So they were going to put their facilities to work. In the toll milling agreement, they took the resins, shipped them to the third party, where the resins were stripped of the uranium and the uranium was produced in the final dry yellowcake. That arrangement made a lot of sense, saved the company $25 million of capital expenditure on plant back in 2015 when the uranium markets were not so good. Fast forward to now, 2023. We had idled the facility after a production run of several years. We've re-permitted it as a low pH in situ recovery rather than alkaline, because we fundamentally understood the technicals of the low pH were going to be better. We would get higher recoveries at a shorter period of time. And at the end of 2022, we, as a board and a company, made the decision. The uranium markets were stronger. We had obligations to produce for our sales contracts, and we were going to put the project back into production. So we came into 2023 with the ambition of wrapping up the low pH transition construction work and putting the project back into production with a target of mid-year 2023 to start production. And if you look at our shares and the performance of our shares against others in the first half of 2023, we were one of the leading companies in the uranium sector. So we had a very good start to 2023, but come mid-year, right when we were about to start, and we did our job on our side, the things that we control, we did well. We got the project ready for production. We have the facilities in its current configuration ready for production, and we had well fields ready to roll. But that third party who we had a relationship with since 2015 gave us notice that they were no longer going to process our resins. What changed? The markets. They want to reserve the capacity for themselves. They didn't want to help an industry peer advance. So they gave us notice that it was a 9-month notice per the terms of the contract that they weren't going to continue to process our resins. That left us kind of high and dry. Frankly, we had a mine ready to start, but nowhere to go with our loaded resins. The company had to press reset. I mean, this is clearly bad news for investors who were expecting us to start in the beginning of the year. It was tough on us. You're right. It was corporately a very tough year. It breaks my heart that we weren't able to start. That's the goal of all of us who are production minded, is to be producing uranium. And I look back now and say, geez, if we would have had that production online mid-year last year, what a difference it would have made for our company, putting it online as the uranium market was really about to take off. Our timing was right, our decision making were right. But we, were faced with the situation where we had nowhere to go with our loaded resins. We made the decision and did the technical analysis, updated our life of mine, and announced that we intended to put those plant facilities on site. It's something that's very common is to have what we call a central processing plant, a plant that's capable end-to-end uranium production, not only capturing the uranium on resins, but taking it all the way to dry yellowcake, which is the saleable product. Mm-hmm. So that meant everybody in the investment community and around the world who watches Peninsula was asking me 2 questions. Number 1, how long is it going to take? Number 2, how much is it going to cost? And then the third auxiliary or corollary question is, where are you going to get the money? So we put our heads down, we put the plan together, we assessed the costs, we assessed the economics of being an end-to-end uranium producer rather than relying on a third party. And, we went about our business, authoring a new life of mine study, and then going about raising capital. So in November, the company announced a 60 million Australian equity raise, really, and it had 2 parts to it. The 50 million came from institutional and sophisticated investors in a placement, and 10 million Australian was coming from our existing shareholders through a securities purchase plan, gave the existing shareholders the opportunity to participate in the capital raise and purchase new shares at the same terms and conditions that the placement shares were issued at. So the placement was successful. We raised the $50 million through the placement. The share purchase plan or securities purchase plan was just wrapped up now. Last week was the end of the opportunity to subscribe. It was well oversubscribed. We had over $30 million in subscriptions. We got approval from our shareholders to do a maximum of 10 million. So we scaled it back to 10 million for those subscriptions, and that closes at the end of the month. So Peninsula has had, I'm giving you a little recap, but a pretty difficult year. But we put our heads down and we pursued all the things that we needed to get things right. Today, we're right around the end of January. I feel like we're very well funded. We have the money we need to build the new plant facilities, the expansion of our plant facilities, and take us to first production. And we have a plan to do that over the course of this year. So there's a recap, a little history, a little reasoning. But today I think the Peninsula is very well situated. We put ourselves back on track, and like last year, when the first half of last year, 2023, when we were one of the best performing stocks as we were emerging towards production, I think we have the opportunity to repeat that. We've had to go through a rough patch, but we have the opportunity now, faced with merely a construction project and the standard risks of construction. We have the chance to perform and deliver a very successful uranium project moving forward.
Well, that's it. That's the interview. We can cut it there. I'm kidding though. But so what I'm thinking when something happens to, when something bad or just unpleasant happens to me, I was give you an example. I was in a car accident recently with my dad's car. I'm generally a respectful and a careful driver, and I thought I was in my right, but the insurance company didn't agree with me. And so I spent a lot of time thinking, going back and sort of replaying it in my head and saying, what could I have done differently? And it's basically two questions that I ask myself. So it's, what could I have done differently? What am I going to do differently next time? So I want an answer to those questions from you as well. First of all, what could you have done differently? You told me that per the terms of the contract, they basically went with the contract, which was 9 months notice. Well, that was in the contract already. So could you maybe have foreseen that? That's the first part of the question. Like, could you have foreseen this, and could you have maybe sort of hedged yourself against it so that even if the contract fell through, which it did, you could have then still started on time, or maybe just with a smaller slowdown, basically?
Those are good questions and important. We really didn't have any any indication that this was coming our way, this change. So I don't think without the value of the ability to read minds or know what other people are thinking, we didn't have a clue that was coming, and that's for better for worse, that's the truth. We were working very closely with the operational team of our contractor to get the project and the plant ready in coordination with their plant, make sure that they were very well aware of where we were headed and what we were planning to produce. So they didn't give us the indication. I think it came from senior management, the decision that they wanted to reserve that capacity for themselves. The uranium market was coming up, and they said, hey, why are we doing this for our peers, right? What we did, and I think we always have had a hedge, a plan B in place, and I think investors miss that fact. But Peninsula Energy, when it licensed our facility, the company was licensed and for production in 2015. The license was licensed for a complete plant. the ability to produce dry yellow cake, and it was licensed for not the 1 million or 800,000 pounds that we could run through a toll processing plant. There was kind of a limitation there, but it was licensed for up to 3 million pounds a year. So in our back pocket, we always had the designs, the front end engineering designs and plans and approval to build the facility. I think what the disconnect was that the 9-month notice period didn't match up with what a construction period actually looks like, the planning and construction and ability to raise money. So, I think that's the real disconnect. And that's a factor of a legacy contract that was signed in 2015. In 2015, there were choices. Peninsula could have gone to one of a number of different places, and no one ever thought that 9 months was going to be an issue, that we would get a 9-month notice and suddenly find us without a home for our loaded resins. So it was a completely different time in the uranium market, and a different world, and we had a valuable relationship with the toll processor from 2015 to 2023. Today hindsight is 2020, and everybody says, well, 9 months should, maybe it should have been a year or a year and a half so that you could have built that facility. But the company's intention was always to grow well beyond relying on a toll processor, and that growth would have come a lot faster if the uranium market had come along in the second half of the last decade. That's why the company licensed for 3 million pounds a year and a full process plant. So we had that advantage. And in fact, coming into 2023, Peninsula's game plan was put the project into production using the toll processing facility, and then go out, on the success of good production, raise the capital to build the back end of the plant. So we were on the pathway. We had intentions to get the money raised and start building the plant. The turn of events caused kind of a flip of the sequence for us. So we had to go out and, raise the money and build the plant before we got started. But, all in all, we were pretty well positioned, and a lot of people think, well, and comment, Wayne, how can you get this done so quickly? It's because we were prepared in advance. We had the permitting in place. We had the planning, the front end engineering of a plant in place, and we were able to move quickly from need to completion.
So you're saying that this what is about a year and a half delay that you're having right now, you're saying that it could have been worse if you hadn't been prepared?
Well, absolutely. We don't have to turn to the regulators and say we need a major amendment so that we can, expand our plant capacity and capability. We have that authorized. There's a great deal of advanced planning in the plant design. The layouts. Before we even finished raising the money, we were ordering structural steel for the buildings because we knew the size and dimensions the building needed to be and what it had to house. So we've had quite a bit of advantage stepping into this because of the prior work of the company.
Right. Okay. But so you're now moving away from working with a third party company. You can never completely eliminate it, obviously, in any business working with a third party. Where do you see the biggest third party risks right now? And if not, maybe necessarily a third party risk, other types of risks. What do you think will be the main challenges in rolling out this sort of new plan that you're going with right now?
Yeah, well, our third party risks are shifting from relying on industry peers and competitors to suppliers and contractors, that are not third party. So, right. Sometimes you find out that the people you rely on are not so reliable, and that's a hard lesson in business.
The life lesson right there.
Holy cow. And that's what we learned last year was that the people we were relying on to support us decided that they wouldn't. So look, the risks for 2024. I think we've done a tremendous job as the company in de-risking everything that we have a comprehensive risk register. We look at a lot of different factors. For us, though, the game plan this year is construction. It's to build and expand the front end capacity and the ion exchange capacity, so we can produce up to 2 million pounds a year from our facilities, rather than about 800,000, which it was initially designed for. Remember, again, back in 2015, it was a capital efficient decision. They had a license for 3 million pounds a year. They built a plant that could produce 1 million. But that was going to be good. That was going to satisfy contracts. That was going to produce extra for the market. Today, we're expanding that capacity to 2 million pounds a year, and we're expanding the capability. So the capability element is being able to take our loaded resins and elute them and precipitate uranium and produce the dry yellow cake product ourselves. Being independent in that aspect is going to be a tremendous advantage, not just on costs, but that we're not relying on others. The risks in a construction project 2024 are your standard construction risks. It's how much time overruns and cost overruns. Addressing cost overruns first. Today I have no indication of any cost overruns, plain and simple. We've been doing detailed engineering. There's the engineers are now putting the construction package out for bids for contractors. We'll learn more as the contractors come in with construction bids, but everything that we've built and done to date has followed in line with our updated life of mine model. And as you pointed out, it's pretty recent. We updated our life of mine model on the heels of this news, and that was the end of August of last year when that update came out. Inflation was brutal. We incorporated a lot of inflation into our updated costs. So when we came out with a new life of mine model, contrary to expectations, shifting this stuff in-house, this work in-house, it saved us a lot of money. But at the end of the day, because of inflation, we actually raised what we said our all-in sustaining costs would be. So, it was a factor of inflation that pushed our all-in sustaining costs higher. So today I feel very good about our cost modeling and our expectations on cost, and that everything that we modeled the second half of last year is still holding to be pretty true, because it's recent and there hasn't been as bad of inflation second half of 2023. The other thing is, the other risk that I've just talked about is the construction time. Just being able to keep a construction schedule. We're doing everything we can to put that in the hands of professionals. The engineering firm is doing engineering, design, and procurement of equipment, and then it'll be finding a construction company that is very capable and competent of managing the schedule. So, and that too is largely in the hands of the engineering firm professionals. And we have a very capable and competent team in-house overseeing the engineering firm's work. And we're gonna do absolutely everything we can to maintain a schedule. But who knows what 2024 is going to throw our way. I can't guarantee you there won't be a black swan event. Transportation around the Red Sea isn't going to impact something. I don't know what it'll be, but I think we supply and source things locally because of that. But it's something like that. Something's going to happen. It always does. We're going to do everything we can to overcome that and build some extra time into the schedule. I feel very good that today everything I'm hearing is the engineering firm is guiding that we have the time to successfully complete construction and put the project online before the end of the year.
Are you building in any margin in that, though? Because Kazatomprom is having trouble sourcing acid, for example. They are not they use a different type of acid, of course, not a low pH, different topic.
No,
But
it
I
is
want
the
to point out
same.
that even the best the people who like the largest producers are even having troubles. Cameco is having some issues here and there with that. So like, are you baking in any type of margin for a slowdown here in terms of just
Yeah.
in you know, in the frame of risk management?
Yes, of course. Certainly our life of mine financial estimates carried contingencies, reasonable contingencies for the level of study that it had. So in our budgeting and costing models, we carried considerable contingencies, and then at the outset, the expectations that we've laid did have room in them for time. We think it could be a 6-month construction project. we're still a little bit away from having a construction firm on site and digging first ground, but we are prepared to move it quickly, and we think that we can build this in 6-8 months, and there's still 11 months left in the year.
Right. But maybe on the topic of sourcing the acid, as far as
Yeah.
I understand it, yours is different than what Kazatomprom is having issues sourcing. But is that because you said you're sourcing it locally? Is that true?
Well, that's right.
Okay.
Look, we use a broker, and we have a supply agreement with the broker. We guide them as to what we expect to use in any given year. Of course, we're not really using a lot in 2024, but the back end of 2024 will be preconditioning our well fields and using acid. We do use the same acid, sulfuric acid, that the Kazakhs use, and
Okay.
but the Kazakhs issues, to my understanding, are they're trying to they have built infrastructure. They use an awful lot of acid because they have their entire mining industry producing 60 million pounds a year,
Yeah.
using low pH in situ recovery, sulfuric acid. So they have a lot of infrastructure for that, but they're trying to increase their production rates by 20%. And that means they need to increase their acid consumption equivalently 20% higher. So the struggle they're having is not that their fundamental supply is diminished, or it's that they have an incrementally higher demand and they don't have the sources for it. This time of year, in Kazakhstan, the agricultural industry consumes sulfuric acid as fertilizers and such, and are in the creation of fertilizers, and competition in the market. So it's not surprising. It's almost standard every year that sometime around this year or this time of the year, there's competition for supply. And when you're increasing your demand, and you're increasing the competition. But in the United States market, we feel very comfortable that the United States market, which is really a world apart from the Kazakhstan market, it's a global commodity and you can ship it, but acid is produced in the United States, and we feel very comfortable that we've secured a supply for us moving forward.
Right. Okay. I don't know where I got that from, that sort of your ISR is different than the Kazakh ISR. But as far, I mean, no, so that's good. No, it's a good point. It's a good clarification. Do you think, thinking of third parties, you have a couple of contracts signed? As far as I understand, about a third of your book is covered by forward contracts. Are clients a risk? As in, could they flex up the contracts and say, like, Wayne, no, we want our stuff now in 2024, and so you have to go and buy it in the spot market? Like, is that a risk?
It's not. Actually, with the news in the middle of last year, we did have deliveries scheduled in 2024 because we were anticipating being in production in 2024. And with that news, we said we feel comfortable that we'll be able to adjust the delivery schedules with our current customers. And today I can say state very clearly we have completed rescheduling of our 2024 expected deliveries into later years, 2025, 6, and 7, We've kind of moved it out over the years in cooperation, very good cooperation with our customers. I want to thank them. They were very, very helpful in this process and helping us navigate what investors identified rightfully as a significant concern.
Hmm.
Today, I can say with clarity, we're not anticipating any situation where we would need to go into the market and buy at a higher price and sell into our contracts at a lower price. Our customers were fantastic to work with, and we have completed the formalization and paperwork of agreements of altered delivery schedules that very well match our projected production schedule going forward.
Well, I appreciate you thanking them, but that only works if you call out their names. So I'll only allow you to thank them if you can tell me what their names are.
You're gonna have to delete that segment.
Okay.
I can't. And this is just the nature of our industry. The utilities that we work with, have confidentiality clauses
Sure.
in our contracts, and
Yeah.
we've never named. We just don't. They ask that, for their own purposes, and they wish that we don't speak of the details of our sales agreements, and it's not something we're
Right.
in a position to do. Sorry.
No, I don't worry about that. I was really only half kidding because I know how the industry is very secretive about these things. And I probably don't understand it well enough to understand exactly why they have to be secretive. So they get a pass from me. But those contracts, how much you say you don't anticipate having to buy in the spot market so that you have to deliver in 2024. But I'm asking about the stuff that are not to be anticipated, sort of the black swan, the unexpected events, as in the sort of what could happen, as in how much flexibility is in those contracts. Because we did see that happening last year as well, where utilities were maybe flexing up their contracts. Again, that's kind of secretive, so we don't know exactly who or what or when, but we saw a little bit of that.
Yep.
So yeah, how much flexibility is there in your
So
contracts?
typically, when you hear about a utility flexing up or flexing down, they'll flex up when the contract price is below the market price. But what that means is in the contract, you'll have a delivery schedule. You'll say you'll deliver, let's just say, 1 million pounds in 2024, and it might be in not less than 2 deliveries, but it's 1 million pounds plus or minus 10, 15, even I've seen numbers as high as 25%. Peninsula contracts have very little flex in them to flex up or to flex down. Our contract volumes are modest, and it's hard on a small and up and coming producer to offer flex up or down, because of you need to have a good idea how much you need to produce. So today, so if you had a contract 1 million pounds plus or minus 10%, you could flex it up to 1,100,000, right? That's what flex is. It's not flexing in timing. It's flexing in volume. And so our contract very specifically calls out a volume each year. And in order to change that would be an amendment to the contract that we'd have to agree to.
Okay. So you're basically going to ask for more money.
If the only, why would they ask us to, deliver something we didn't have, if it's going to cost them as much for us to go in the market and get it as they could do on their own.
Okay. What do you say to shareholders or potential shareholders who say that you're maybe over contracted too early, though? And let me tell you where I'm coming from with this is because there seems to be big love in the sector for John Borshoff, who says, oh, utilities can call me at, I don't know, $500 or whatever. I'm not signing any contracts. I'm 100% exposed to the spot market. We did see what that meant last cycle, though, so maybe not the ultimate best strategy there. But you still have people out there saying, oh, Peninsula is the only one willing to accept lowly priced contracts. What do you say to those comments?
The contracts and relationships with our customers are very important assets to the company. I'd remind these people that their thought process has to take into consideration that the contracts that Peninsula has were signed typically in 2014, 2015 timeframe as the company was preparing the Alliance projects for production. So some of the pricing mechanisms reflected the then current market. The longer term market then was strong, and we had pricing mechanisms in our contract that were base price escalated, and they've been escalating over the years, and market related pricing mechanisms. Typically, the market related pricing mechanisms have floors and ceilings, and the floors and ceilings reflect a span of plus or minus from generally where the current market is at the time that those are signed. Our contract book today, the last time we guided, we said we expected an average revenue from our contract books in the mid-60s, the low to mid-60s, and dollars per pound, and with an all-in sustaining cost of $50 a pound. Every pound that we can produce and sell into contracts is going to bring a profit.
And just
on average, and so I think the thought process, we as a company have been delivering to our customers since 2016. Every year, Peninsula has been a company that has sold material into the market every year, or to our contracts every year since 2016, and we have an extraordinarily good relationship with our customers. We value those contracts. And a third of our projected production over the next 10 years is not a big level. As a businessman and as a guy who wants to make sure that Peninsula is a successful and going concern moving forward, I think it's more important or more of an imperative to have 50 to 60% of your product spoken for in the markets. The more that you risk market price, the more you risk failing as a company when the markets go down. And there is a history of that. All you have to do is look back in time a little bit in the uranium industry.
I understand that. That's something that I've been asking myself, is like, why is this belief out there still alive given what happened last time? Because some people in the space get standing ovations, if you will, for doing that last time, while but they're, that one company in particular went bankrupt just because of that strategy. But there's still that expectation. I mean, that's what retail investors want to see. And so if they see being, a lot of people buy into uranium because they think there's going to be an overshooting prices to 500 or even more bucks per pound. So how do you manage the expectations while also managing the business?
I think that, again, investors, I understand and appreciate investors want blue sky. You want to be able to realize high prices when high prices are offered. And the way we manage contracting, I mean, not every contract is a fixed price. In fact, today utilities have a preference towards hybrid contracting, that almost every contract has a base price, fixed or escalated price component, and it has a market price component. And, that means that both the buyer and the seller are sharing some risk in the market, while at the same time locking down a price that presumably you wouldn't sign the contract unless you found favorable. So, if I was to go in the market today and contract, first and foremost, the long-term contract pricing is very favorable and profitable for Peninsula Energy. We'd be happy to enter into a contract that had a base price escalated component to it. We'd also be very happy to have some exposure, to the risks of the market upside for the blue sky. But we'll share that risk with some downside too. that's why we have floors and ceilings in the market based, is that, both the buyer and the seller are sharing risks, but we also want to cap those risks. For the buyer, they want to cap the price on the upside, and for the seller, we want to make sure we can make a profit. So we put a floor.
And you ran that production plan at what, $67, I believe. Is that unattainable? And that gives you about a $1 billion in revenue a year with that over the LOM over the 10 years.
Yeah.
Is that unattainable base for contracts, right? Like, if a utility comes to you or you go to them, can you say, I am not signing a contract below that level? Like, is that doable in this market?
Yeah. I mean, look, the long-term contract price is lagging the spot price now, and has been for a while. Recently we saw publications saying the long-term price is $68. Yeah. I doubt that anybody's going to sign a contract at that price right now, because the sellers are just not going to agree to that. The fact that it's $68 just reflects that the long-term price has not, a new contract hasn't been signed in the new market. But everybody is absorbing what the move to over $100 in the spot price means. Is it long term? Is it going to set? Is it going to go higher? Sellers hope it goes higher, and that the long term price follows, and it should. The whole purpose of the long term price is to set an incentive for sellers to commit their pounds to the consumer. Okay. I mean, that's what the long-term market's about. As a seller, I want a long-term price that I believe is higher than today's spot price. Right. So who's going to do that? Right. I mean, who's going to sell at 68 when the spot price is over 100? Not many people, but at the same time, we can acknowledge that $68 is, the long-term price in the market, the base is higher than what Peninsula modeled in August of 2023. Our life of mine average revenues to be which was, as you pointed out, $67. So today anything that we contracted is more than certainly going to be accretive to our financials.
Do you expect those timeframes to adjust as well? As in, like, can you sign a 10-year contract? Is that something that is going to come to the industry with this cycle?
More and more. With cheap uranium, utilities were able to write short-term supply agreements, 2-3 years, even 4 or 5. And anything, they felt a lot of comfort that they could, secure supply in the spot market or through the carry traders of, the carry trade seems to be a model that's dead now. But there was always uranium in the market, and that's why it was cheap. Now what we're finding, look, the price went over 100 on very low volumes. I mean, it wasn't supported by a lot of volume. It was supported by a lack of supply. So we all feel that supply wise, there's no solution to the lack of supply other than new mines coming on, and it takes a very long time. And not everyone who decides they're going to put a uranium mine into production is going to be successful. So look, as investors, you should look for companies with teams with track records and deep knowledge of how to make it happen. Those are your best opportunities for investment if you're looking for a uranium producer. There are uranium explorers who will also, ride the tide of higher uranium prices, without ever having an ambition to be a producer. The value of the pound in the ground goes up too. So, if you like a uranium explorer, look for the ones who have the track record of finding resources and developing them in a short period of time, because this is a cycle. We're on an up cycle, and I don't know when that'll turn, but it won't be forever. And I personally think we can very easily set an all-time high for uranium prices in 2024. I've kind of asked the question, not if, but when. The stage is set. So, But that doesn't mean that I believe in nothing but blue sky. I've seen cloudy days and rainy days and snowy days in Wyoming. There's days that you have to weather, and the most successful companies are the ones who've been around and know how to manage their economics during good times and in bad.
Mm. What does I do want to make a note or ask a question around that as well, what you just said. But about how active are you on the contracting front right now? As in, I know you're not signing because you're going to have to announce at least something around that, but is it like is that something you're leaving for next year and the year after that because you have 25, 26 covered? Or are you still talking to utilities basically?
Well, utilities aren't looking for material now in 2024 or 25. They're looking for material in, 26, 7, 8, and beyond. I mean, that a long-term contract with the utility today signed in 2024 is not likely to kick in before 2026. So we have to be active in the market. We have to be talking to our customers because, we anticipate producing, 1.5 to 2 million pounds a year. And, we have on average 500,000 pounds a year committed to our contracts, which means that 1 million to 1.5 million pounds will have to find its way into the market somehow. And, signing a longer term contract for deliveries out into the future today, means that you can plan your production scenarios and prepare for them, and that you're going to most likely make money on them because you'll have a pricing structure that incentivizes you to produce.
Right. Right. Okay. But so that's basically a nice way of saying, yes, we are talking to utilities.
I'll agree with that statement.
Okay. You made a note saying that you want to look for a company that's actually trying to become a real producer and not necessarily be a land bank or an optionality play or anything like that. And something that I look at is companies that can also produce at any reasonable price that is below sort of your global average, sort of lower quartile producers. And for you specifically, getting your production costs down is, or at least should be, a main priority here because the sensitivity analysis that you have on your presentation shows a rather stark increase in NPV with each 5% points drop in OPEX, basically. So talk to me about that. I mean, is that top of mind? Is that a main thing they're trying to achieve? And how are you going to decrease production costs here?
Yeah. Well, look, we talked about acid markets a little bit earlier, and I can tell you that, today, as a new entrance into the sulfuric acid market, and one that, it's an important commodity for us to be able to secure, but until we get up and running and can make firm commitments in advance to annual volumes, we're a little bit more subject to the whims of the spot market of sulfuric acid, and sulfuric acid's a lot like uranium in that you have a spot market price that can fluctuate considerably, and then you have contract prices where you're locking in volumes and they're committing. They're taking from the base supply and transferring it to a base consumer. We will be a base consumer over the years, and we will be able to negotiate more and more favorable terms for the commodities that we consume at our project. So that too goes with drilling and other construction materials. The longer that we're in business and successful, the more forward thinking we can be with our commitments and the better pricing. So, that comes with the maturity of an operation. We're at the front end where we're trying to get an operation up and running, and our focal point today is not fine tuning operating costs. Our focal point is getting into production.
Right. That's a very good statement. And then later down the road, it's sort of well, something else actually that might work or that will work, if it happened, it would be economies of scale. Of course, is that something that's doable or possible or potential for Peninsula in terms of M&A in the space being acquired or acquiring or merging with any of the other neighbors that you have there?
Yeah, that's a great question because that really goes to the fundamental, outlook and business plan of the company. Earlier, I mentioned we have a license to produce up to 3 million pounds a year. We're planning to build our capacity at our current plant up to 2 million pounds a year. And the guy says, "Well, why are you stopping at two?" We're the back end of our plant will functionally be closer to a 3 million pound a year back end, which means that we can produce 3 million pounds a year of yellow cake. That's the design for the back end. We won't put all the dryers in that we need, but that's something we can add into the plant as we expand. Dagger, the project you mentioned in your opening monologue. We added that project last year. It's about 20 kilometers by road, good condition road, from our Ross soon to be central processing plant up to the Dagger project. In the future, as Dagger is twice the grade of the Lance projects, and it's really well drilled out and pretty good understanding of the resource. I would anticipate that the Dagger becomes a satellite facility with a resin processing plant capable of capturing 1 million pounds a year. We'll truck the resins from Dagger down to our central processing plant at Ross in Lance, and we'll be expanding to 3 million pounds a year. We with the central processing plant that we're now building are establishing a platform to have spokes, to have satellite spokes and we're building the hub. A lot of people talk about hub and spoke. Dagger can be the first spoke. The southern portion of the Lance projects down in the southern portion of Barber, that's as far away as Dagger is from the central processing plant. You noted 37 kilometers north to south. The Lance projects is a large and substantial uranium resource. And the southern portion of the Barber project is not a target pipeline project where and by pipeline, I mean connecting a physical pipe from the south to the north, right? It's also a candidate to be a satellite facility. So, from Ross and Kendrick, which are our near-term production areas, and the areas that we put in the life of mine study, producing 15 million pounds in the next 10 years, we limit it to about 2 million pounds a year. But then, the growth of the company comes from the southern portion of Barber, where we can put in a satellite facility, and Dagger, where we can put in a satellite facility, and other growth initiatives that we might have on the table.
What then what's the timeline sort of that? Because I mentioned at the beginning that you're drilling a Dagger. I don't remember where I saw that, and I don't know I don't know if that's true for 2024. Are you?
Yeah. So look, the inaugural resource at Dagger was 6.9 million pounds of inferred. In 2024, our ambition is to do some confirmatory drilling. This was 24 million pounds based on historic drilling that was done by a well-established and knowledgeable company in the 1970s. All right. So we call it historic drilling. It's almost 50 years old. That doesn't mean it's bad data, but in order to qualify a resource to be measured or indicated rather than inferred, you need to do your own confirmatory drilling and show that the drill data that you're relying on is reliable. So we have a drill program planned for Dagger in 2024. It'll be a modest confirmatory drill program, twinning some holes and logging them and taking some core samples and doing mineralogy and leach testing on the core samples. But with that extra data, that very modest drill program, we expect that we'll be able to upgrade the resource to measured and indicated, because the drill hole density, the spacing of the drill holes, would normally qualify that to be measured or indicated. But because we haven't done confirmatory drilling yet, we wait. We rolled it out as inferred as the rules and guidelines indicate we should. So we're looking forward to that. So yes, the answer is we're going to drill a Dagger in 2024 with a purpose. And the purpose is going to be to confirm the resources and upgrade them in quality.
how much are you budgeting for that? How many meters are you drilling, and how much money is that going to cost you?
Yeah, it's a very modest program, less than $500,000, and you know, we I like drill meters, but I don't even think about it that way. It's probably 10, 20 holes,
Okay,
1,000 feet
yeah,
most.
sure. Okay. How much money are you budgeting for 2024 total in terms of exploration development activities?
Yeah. Well, the bulk of our focus in the wellfield side is the development of mine unit 3. It's the third mine unit in the Ross area, so that it's ready for production when we have the plant ready for production. We now have completed the monitor ring, and we have 7 drill rigs currently active in the mine unit 3 area, installing production and injection patterns and wells, and we'll be doing that. And as we can identify additional drill contractors, if there's anybody out there listening who runs a drill rig and wants to come to Lance, let me know. As we can bring additional drill rigs on site, we plan to bring that number up to 10, 12 over the course of the year, and having that then will allow us to move rigs to Dagger and to do some additional exploration and development drilling, also in the cards for the Kendrick area, which is the next production area sequentially. So we have plans to not just develop new production well fields, but to branch out some drilling activity to some of the further reaching areas that we control to plan better for the future.
Mm. So how much money does that come down to budgeted for this year total to spend?
Well, a significant portion of this year's budget goes to wellfield development for preparing for production.
Okay.
We probably have $2 million total for drilling outside of the immediate production areas of Ross.
Okay. I'm just trying to figure out if you're going to have to raise capital. Basically, that's where I'm coming from, because last statement showed 12.5 million in cash. You spent about $500,000 on keeping the lights on and promotion and whatnot.
Now, yeah, we have this year's budget covered now, fully funded. We actually, because we monetized our uranium inventory, which you haven't been able to take into account yet. And, we did that in December, and we were paid. We ended December with about $17 million cash on the accounts. And then we've just completed the placement and share purchase plan, which brought in another 40. So we're $57 million thereabouts. We're sitting with a healthy bank account today. And that bank account is designed to fully fund the plant construction and wellfield construction and planned activities that we spoke about here this year, to take us to first production. Will we raise money again? Depends on what we need. It does. Again, in your monologue, it was so comprehensive and well done. I don't know why I'm talking. We need to go from first production to the point of sustained free cash flow, positive free cash flow. And that typically takes 8 to 10 months for a company to, build an inventory, get it moved to a place to the point of sale, and to arrange sales. So, it's 8 to 10 months into 2025 before the company is really sustainably in a free cash flow positive position, according to our current forecasts. And if we're successful with our production. So that said, I've told you we have money to get us to first production. We're looking for funding solutions for the balance. The extra months, the first years of our first months of production are capital intensive with no income. Right. You're putting money in for chemicals, you're getting your uranium production rolling, and you're developing new well fields so that you have them available for future mining. You can't just mine one new well field forever. So you're always developing new well fields. You're always investing in operations, and we're looking at debt solutions first and foremost, for the next funding. The U.S. government has a program that we believe we'll qualify for that may cover the entire need. It'll be very friendly. It would be very friendly to the company and to the shareholders. We're also looking at other debt sources, and we're evaluating the best course for us to fund operations in the early part of next year, beyond first production, and to make sure that we do that right. I won't rule out equity. I won't rule out debt. Our eyes are going into this looking for the best solution.
The U.S. thing you mentioned is interesting to me. That's a debt solution, right? It's not a grant or something.
That's right. It's a debt solution. It's not a grant, but government-backed debt usually comes at very friendly terms and it's good tenure, and fair repayment. So
right,
we're advancing that now with the relevant U.S. department. We have a debt advisor on board, working with the company, scouting the universe for proper debt solutions. And government debt solutions are certainly at the forefront of our minds and a thought process, because first of all, we have the time to execute on one of those. Those aren't the fastest moving solutions, but we have the time because we have a healthy funding situation today. We have the time to work on and do it right. Appreciate that. And then, secondly, there are always other opportunities. So the uranium market's in a good place. We have a very good project with a bright future. We have a lot of funding opportunities and avenues that we can look at.
Last year when we spoke, you told me that you might be interested in a U.S. listing or at least a North American listing. So in your case, it'd probably be a TSX as opposed to a TSX-V. But I mean, yeah, you don't really have any ties anymore to Australia as much as the company had when it was first founded by its Australian founders, basically. So while we're on the topic of talking about the US, is that still in the making? Like, are you going to be going for a US or a North America listing this year?
Yeah, first and foremost, we have strong ties to Australia. The vast majority of our shareholders are there. And I think the Australian market for supporting Peninsula Energy over the years. But I believe that North American listing could really help to unleash our share price, with additional opportunities to trade in North America. We do trade on the OTC under the symbol PENMF. So, if there's individual investors and retail investors in the listening audience who are interested in trading Peninsula, but not, staying up all night and watching it, and, while it trades in Australia, feel free to go to the OTC markets and pick up some shares with PENMF. That is a healthy and viable trading platform. But a proper listing in North America is an initiative that last time we talked about it, but we had to put that to the side, press pause on that initiative in the middle of last year with the new issues that we had to deal with. So we pressed pause on that, but that doesn't change the company's ultimate desire to strengthen the trading of the shares by opening up trading in a proper market in the U.S. or Canada, North America.
That's right. And don't worry about uranium investors staying up, because we generally don't sleep. This is what the trade has done with us. So we always stay up to see what's happening in Australia and what's happening in the US. But I think there's a good overview. I think we could keep talking. I can keep coming up with yes but questions here for a couple of more hours. But I think this is a good overview for now. Let's maybe try and catch up sooner than a year, because it's been about a year since you and I spoke. Yeah. But what are some good questions that the actually smart folks that you talk about daily are asking about some of the funds, or like an interesting question that you got from someone, but but I'm not asking here.
Well, you did a really nice job. I mean, I've been talking to a lot of folks who, are looking at Peninsula now and saying, gee, you've done a fine job of addressing the issues. I think you're going to have a good year ahead. You've now unleashed the shares in the Australian market. We've answered the funding questions. We're pursuing the construction of the plant so we can be an independent producer. We're going to have excellent news flow, and I think that's probably the one thing you didn't ask is what's your news flow for 2024. What's the most exciting things you're going to talk about. Look, we're going to break ground on the new plant. We're gonna do some resource expansion drilling at Lance and at Dagger, to work on something that Peninsula hasn't done for quite a long time, and that's expand the resource. When you had 54 million pounds of resource, and you had a plant that could produce 1 million pounds a year, there wasn't a lot of reason to spend good money expanding the resource, but the market's very favorable for that. So we're gonna put some time into resource expansion drilling, focused on construction. We'll have news flow from that. And at the end of the year, the most exciting thing, what I'm most looking forward to is the news flow that we're starting production, all the news around the start of production. So, 2024 is loaded to be a very good year for Peninsula. We have the right team. We always have had a very capable production team, and I'm very proud of that team. They've stuck with us through the thick and thin of the back end of last year. Everybody, heads down on the desk, working hard, getting studies put together, putting assessments together, doing the capital raise. That's a heavy lift. That's a lot of work. We're well positioned now to have an excellent 2024, and we'll have news flow, to excite investors over the course of the year.